Sherry. I'm your host for today's Traders Exclusive Strategy Series webinar. Today, we're going to hear about the one strategy you need to earn money for day trading, swing trading, and options trading. We're going to learn about how to avoid the pitfalls of the strong desire to buy the low or short the high with the proverbial quote-unquote home run move, how to identify and profit from breakout trades and other setups, and why call buying is not always bullish and put buying is not always bearish. And that's just 4 points out of our 4 speakers' talks today. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you're going to find a recording of today's webinar. And before we get started, you know what I have to do. It's time for the disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations presented here are subject to change at any time. Past performance is not necessarily indicative of future results. Please take notes with a little bit of context and write your questions down. I'm going to ask our speakers if they want to take questions on the fly. A lot of our speakers like to say, did you do this and have you heard that, and getting you to answer. So there'll be a little bit of engagement involved, and or some of them like you to hold your questions until they're done, but you'll know when we're ready. So without further ado, I want to introduce you to our first expert, Melissa Armo of the Stock Swoosh. She is the founder and owner of the Stock Swoosh. It's an international educational company where she teaches people how to successfully trade the stock market. She owns the method that she teaches, and she created it, and it's unique to the Stock Swoosh. The method is based on one strategy called Golden Gaps, which pinpoints institutional money in the stock market. She's also the executive producer and creator of her own television show, which is titled Make a Million with Melissa. And Make a Million with Melissa is a what to do and how to do it television show on stock trading. She also appears on TV as an expert stock market analyst discussing the market, stocks, news, and world events on Fox News, Fox Business Network, RT America, Cheddar TV, and CBS News Corporation. Thank you for joining us today, Melissa. Just 1 second, and I will get my, you'll need to unmute yourself. I'm going to make you the presenter.
Good morning.
Hi, and I'm also going to change you to an organizer so you can see the questions on the fly since we talked about this before. And take it away. Thanks for being with us.
All good?
All good. Now I can hear you.
Wonderful. Thanks so much, Sherry. Thanks for having me. It's nice to be back to Traders Exclusive, and here we are, halfway through 2022. Really hard to believe. We're actually even halfway through the summer, which is even more hard to believe. This year is flying by, and as Sherry said, I talk on TV about the stock market and the economy. In fact, I was on CBS News this morning, and of course, everyone is talking about inflation. Everyone is talking about a recession, and everyone is talking about how the market's falling. This may scare people who are invested in the market long term, but for those of us that are here, if you're new to trading, if you're currently trading, or you're someone like me, if you're an active trader, you can actually take advantage of the sell-offs in this market. And the market has sold off for most of the year so far of 2022. So I focus on shorting. I like to short. I've been shorting for years. Even though the market was bullish prior to this year, I've been shorting all along since I created my own system. And that is what we're going to talk about today. The advantages of shorting, the system that I use. And again, if anyone has any questions, you can just plop it in the room and I will see it as we go along today. This is me, and I'm sure some of you already know me or have seen me. If you have questions, you can call me at 929-3200-GAP. You can also email me at melissa@thestockswoosh.com. And you can feel free to follow me on Twitter, Facebook, YouTube, or Skype, where I have many of my TV hits, and then of course webinars like today. So we're getting into, again, halfway through the year. If you've been someone that has been attempting to trade this year, buying the dips and failed to do that, it's very easy to see that it's not working, and therefore you need to do something different. What is that? Well, you have to find a strategy, in my opinion, that works in any market conditions at all. The reason that I like to short is because short moves happen fast, very, very quick in a short period of time. Because when you think about it, if you're long a stock, okay, and then you're up money, and then all of a sudden you're down, and that's what's happening to people in the market right now. You're down money, you're down in the position, you will panic. Should I sell it? Should I get out of it? What should I do? Okay. Actually, the correspondent today on CBS News said she was in positions that she had bought, and she thought they were good stocks, and she's down in them, and she doesn't know what to do, and she's kind of panicking. She said it live on air. This is the philosophy. This is what happens when people are down money. They panic. And then we, as traders, as individual traders, look for specific stocks or the market to short against the panic that's coming in. So one of the nice things about what I do is the moves happen very quickly and very fast. And again, why do you want to be in and out of trades fast? Because you never know what's going to happen next. The FOMC minutes are out this afternoon. I'll be off the air by then, but that's out at 2 o'clock. We have the unemployment number Friday morning. There's so many things, so much volatility that can affect the market on any given second or any given day. So if you can get in and out of a trade in 5 minutes, 6 minutes, 10 minutes, 15 minutes, or even the first half hour of the day, it's a lot better than holding something forever while you're waiting, and then all of a sudden the position is affected by something that happens news-wise or data-wise or some kind of report that comes out. So if you're here today, you're here because you may have an interest in what I do, you may be interested in shorting, or you may be interested in a strategy that you can trade that doesn't take up a lot of your time. Because again, time is money. Everyone is busy. Everyone is usually families or things to do. People are even working 2 jobs right now to get by with inflation. So people have things going on. And so the idea of making money on the side extra, whether you want to do this full-time or part-time, is always advantageous. Even if you can't trade Monday, Tuesday, Wednesday, Thursday, Friday, if you can trade 2 days a week, 1 day a week, that's better than not doing anything at all. And again, some people have been attempting to trade for years, and they spend 6.5 hours at their desk all day. I do not do that. Okay, I focus on the morning time. That is the time of the day. Now, I plopped in here the results so far year to date, 2022, for where we're at with the trading room. These are the day trades for the whole year that we've done in the room. I run a live trading room. I call the trades live every day. If you decide to do my class, you will get the calls. We've been doing mostly shorts. So these are mostly shorts on here, the stats. And again, the average risk per trade is around $2,800 per risk per trade. These are day trades. They are equity trades on margin. And again, if you have questions on that, you can ask me too. You must have a margin account to day trade, and you must have a margin account to short, okay? So this is, I call it advanced trader, because a risk of $2,800 per trade is a steep risk, in my opinion. But we're at $386,094 6 months of the year. It's been a great year. We've had a lot of big moves. We've had a lot of momentum. We're going to talk about that today too. So if you're trading or you're thinking about trading, the fact is that you need a system that produces results in order to make money. And you need a system that produces results in a volatile market, which we're in right now. So my system, again, as Sherry said, is called the Golden Gap. It teaches you how to trade gaps and to produce results by shorting. And volatility is the name of the game right now in this market. Why? Every time the market looks like it's going to go up, we rallied yesterday, then we were up this morning, and now we're down. And again, I don't know exactly where we are here now at 108. We have FOMC minutes out at 2, but this is where we were earlier when I clicked the market. This is a chart of the SPY, the S&P ETF. You can see we're down. So here was the rally. Yesterday it came out. Secretary Janet Yellen said, oh, we're going to lift tariffs. We're going to lift the Chinese tariffs. Everything's going to be fine. Everything's going to be great. The market had a positive reaction. Boom. Didn't go anywhere, fell immediately today. And again, we'll see where we're out the next 2 days of the week. It's a short week for markets, but you can see here's the rally we had in the 3rd week of June, and then we sold off. And this was last week, right before the holiday. So the market has failed in every rally so far this year. Does it mean that it's going to fail overall, that we're never going to go back up again? We're never going to have a sustained rally? Not necessarily. But as an active trader, as a day trader, I'm looking for opportunities, individual opportunities, each and every single day in the morning early to get in and get out. Whether the market rallies all year, whether it drops until the end of the year, the question is, I'm just looking for things to do, specific stocks, specific trades to do in each and any day. And again, many days we've been doing the market too. But the importance of a system is like having a map. If you were going to go travel, okay, I live in New York, I live in Manhattan. If I was going to go travel to some country that I've never been in before, I would take a map, okay? You need a map to tell you where to go on any given day. If you don't have that, you're kind of just trading blindly. And I think a lot of people have gotten into the habit of trading blindly. One, because the market was very bullish last year in 2021. People went long strong stocks, weak stocks, and made money stupidly last year, even though they didn't know what they were doing because the market was so strong, okay? And traders tend to want to go long more than they want to tend to short. That's, I don't know why, that's not me, but that's a lot of people. I guess buying at the low, selling at the high, people can wrap their head around that shorting. Not everybody can wrap their head around. But again, shorting can be very prosperous, very advantageous. You can make a lot of money shorting. But a map tells you where to go. So my system is like a map in the morning that tells me what stocks to trade or whether or not I shouldn't be doing anything, okay? So my Golden Gap trading system is a system that teaches you how to rate, pick, and play bearish professional gaps. The Golden Gap trading system looks at 26 points to examine and rate the stock that is gapping. This is how you can find which gap is the best to trade each day. And again, I focus on shorting. It's momentum, okay? We're trading momentum. Why is the market not falling through again today, at least for the first part of the morning, to the upside? Because there's no momentum to the upside today. If you were trying to go long today, you wouldn't be making any money. You'd probably be down. Most stocks today are going with the market, okay? So why short? Why do I like to short? One, because short moves happen quick, okay? And fast trades, in my opinion, are the best, and not only in this market, but in any market. Again, too many variables, too many things can affect your position if you're in something. It's kind of like if I said to you, okay, if you had $1 million in your trading account right now today, an extra $1 million in your account, what would you do with it? Would you go long the market here today? Would you? Or would you short? Now, maybe you wouldn't short. Maybe you think the market's hit the low for the year. Maybe you think that. But would you go long? I mean, the reality is I wouldn't, okay? And I'm not. Whether or not the market continues to break off or not, nobody knows. We don't know. Again, we have a very big number Friday morning, very big. But the fact is, people are scared. This idea of panic, that's come into the markets and the overall economy and worldwide, especially what's going on right now, even with Ukraine and Russia, all of these things. And people say, well, we're not in a world war. Really? The United States has given Ukraine $40 billion or $50 billion or whatever the number is. We keep giving them more money. We're in the war. Financially, the US is in the war. So, you know, the reality is that people are concerned. They're scared about what's going to happen in the next 6 months into 2023. And until some serious changes are made, and in my opinion, it's not raising interest rates, we're going to continue to see high inflation. It's almost at 9%. And we're going to continue to see this into 2023. That is creating panic and fear in people where they are worried about their finances, worried about money. They're taking profits in stocks and positions are up. They're selling with gains. Maybe not as much gains as they had in January of this year. And then also people are getting scared where they're selling when they're down in things, okay? All of that is panic, okay? So again, how do you make money fast? You play a gap early in the morning, quick. You get in and you get out. So I'm looking for the best gap to trade in the morning with momentum. Why do you want momentum? Because you as one individual trader, if you can get it move $1, $2, $3 more, if you have 1,000 shares of something and it drops and you short it and it drops $3, what do you make? $3,000. It's the whole idea of getting a big move, because unless you can take 20,000 shares of something, 50,000 shares of something, some massive position like a big professional trader, you're not going to make several thousand shares in a position otherwise without the momentum, without the move. And again, taking too big of a position puts you more at risk, okay? Especially if you get the wiggles and jiggles of the market. So for me, it's always about finding the best gap. And again, I'm looking to short. So what do I mean by the best gap? I mean, the best gap is the one that's going to work correctly on the day. Not all gaps work. In fact, some people are scared of gaps. They're worried about gaps. They're afraid of gaps. They think they move too fast. The fact that they move fast is actually good. It's actually positive. People are scared of shorting. They shouldn't be. That's positive too. So the idea is to find the right one to do, but you have to find the right stock to trade no matter what you do, okay? Some gaps are not made with institutional money. That is why they don't work. So every time I get up in the morning, I'm looking for a gap that's made with institutional money. Again, I will go long. I mean, we have gone long this year, but I mostly prefer to short, and we mostly have shorted. But the idea is that you can make fast money shorting. Now let's break it down here and talk about what is a gap. Simple explanation of a gap. A gap is a break in continuity, interruption, hiatus. It's a divergence, a difference, a disparity. What is a gap? A stock gap, so the opening price today is different from the closing price of the previous day's trading. A gap is a break in the price action from one day to the next. Simple. So the stock market, the US stock market closes every day at 4 o'clock Eastern time and opens the next day at 9:30 in the morning, Monday, Tuesday, Wednesday, Thursday, Friday. Okay. You always have a close in the open in the US stock market. So with Forex, you only have one close a week. So that doesn't give you a lot of opportunity. This is for stock trading, simply because of the fact that you have 5 days to take advantage of having a gaps happen into the next day. And from Friday, it's into the close from Friday into the morning on Monday, when the market opens at 9:30 a.m. on Monday. Post-market and pre-market trading happens in gaps, happens in the market, happens in stocks. The overall market, and when I say the market, I mean the SPY, the QQQs, you can even say the DIA, which is the ETF for the diamonds. All of those things, okay, have trading that happens after hours and in the pre-market and in the morning. So I'm looking for these gaps every single solitary day. And I put in the gaps here we did all last week. Now we had a short week last week because I closed the room for Friday for the holiday, but I thought we'd go over here every single gap we did last week in the day trades, and then you'd see the ones that we did. There was one trade that we did that lost. We did 2 trades that day. It was a retake, but we had every day was a winning day last week, and we're going to go over it. Now, when I take a trade, I use a stop. I put a stop in. It's a hard stop. It's a limit order stop. That stop protects me. It's like the insurance. If the trade gets stopped out, then I lose whatever I risked. It's not unlimited. Otherwise, you have unlimited risk when you take a position, and that's not good, okay? The idea of trading is not that you'll never have any losers. As you saw in the stats, if you scroll back, again, there are trades that I take that lose, but most of the trades that I take win, and it's about having more winners than losers. But the point of having a stop is, and it protects you so that your losers don't run against you, okay? This is equity trading. This is stock trading. This is where we're buying the actual stock or we're shorting it on margin. I am going to talk about a couple of options because I do options too, Anna. That's later on in the webinar. The trades I'm going over here from last week are the day trades that were on margin. You could have done these trades as options too, but I have a separate options newsletter where you would get the trade emailed to you. That's an options trade. The trades in the room, the day trades, you have to be there live to get the calls, okay? All right, let's go over it. So we did save. We did save on Monday, 6/27. Let's take a look at it. Now, again, what is a gap? A gap is the difference between the close and the open. So this was saved. The night before it closed up here, boom, gap down here in the morning, around 23, whatever and change, fell, dropped, we shorted it. The red candlestick here, the red bar, depicts the fall off and the selling that came in to save, okay? So we shorted it. Entry was 23.10, 7,000 shares at the risk of 2,800. Exit was 22.75. Not that big of a deal, in and out. Profit was $2,450. Again, usually I'm looking to make 1-to-1. So if you're risking 500, I'm usually looking to make that amount. So whatever you turn it over, close enough. This got to the target, this got to the number, the first target out. Again, we're in and out quick. Did this continue? Yes. You can see that it continued down in here. And I'm going to show you the 1 minute. As far as futures, Anna's asking about futures. I do not trade futures. Again, I'm very good at reading the market, and we're trading gaps in the market. If you want to apply that to how you want to trade the futures, directional bias, that's up to you. I personally am not doing that though, Anna. So the application for how you want to use the information is up to you. Now, here was the save trade. Again, this is a 1 minute. So the daily showed the gap. You can also see it here in the one. Again, closed here at 4 o'clock, boom, gap down here in the morning. You see where it is? We did it, got the drop, got out, done. This did come all the way down. Again, I was in and out. I was way out before this. I get this question all the time. How do you get that exits? I do not always get the low of a day exit in a short. I do not always get the high of a day exit in a long. That is not my goal. My goal is to make money. My goal is to find the best gap every day to trade and get the direction right and be in and out and book it. I call it chunking it out. Chunk it, chunk it, chunk it. And this was a trade. We were in and out, done. It did continue. It did not get to 22. It tried. It almost did. but you actually could have pulled another 50 cents out of it or more. Again, this still fell in the morning, so you could have held this into 10:30. And that's so fast to me. Again, the idea of trading the 4 o'clock, I think it's just a total waste of time. And most people end up giving money back in the morning if they, in the afternoon if they trade all day. Then we did the next day Nike. So the first trade we did a Nike stop. Entry was 107.40, stop was 108.70, 2,200 shares was a risk of 28.60. Again, this is on margin. You can take less shares. You can take 200 shares, 100 shares, whatever you want to do. I don't think this is expensive, but you might think it is expensive depending on, again, what size of account you have. Exit was 108.70 because the trade stopped out, and here was the day of it. You can see kind of the ugly tail that we had here. So this was the particular day. Actually, Nike had earnings this day. So here was the gap. Stock closed here, gap down, rallied. Here's where we got stopped out. Then we retook it and it fell. I'll show you here on the 1-minute chart what it did. Again, this was really a big move up that happened very quick. Here was the gap. Stock closed here, gap down, fell. We were in it. We got stopped. Then it ran all the way up to here. Again, the whole idea of using a stop is to protect you. It's like the insurance. So you don't have an unlimited risk. You see where it went. It went all the way up here to almost 114, 113 and change. That was an ugly move up. But anyways, I stayed on top of it and we ended up retaking it. You could have stopped. You could have taken the one loss in it and been done. Anyways, we ended up redoing it. Entering the second trade then, which worked, was 108.20. 2,700 shares, risk was 29.70, exit was 106.55. This was, again, a nice move, a fast move in and out, profit 44.55. But I will tell you that this continued. We did an option in this too. It was a put. I think it was an easier play to hold as an option. But anyways, long story short, this went all the way down to like 103 and change on that day. But again, I did not want to stay in this all day. With the first trade stopped, we were up in the second trade. So here was the first one that got stopped. Then we retook it. Then we got the drop. But I just want to show you down in here with this one on the day. So this was into 3 o'clock, 4 o'clock on the day. So you really, and this is one particular one that you could have been in all day. Again, that's not what I like to do. That's not what my goal is. Any questions on this? So again, that was first trade stopped, second trade worked. That was Tuesday last week. It actually was a pretty busy week considering it was a week before a holiday. Part of it was the market. Part of it was that we had some nice flushes in the market. And again, you never know. You never know when you're going to have a busy week or a slow week. Next week, earnings season begins, so I expect it to be busy next week as well. The banks report next week, and I talked about this on CBS this morning too. The way that the banks report next week is a precursor to how the market acts going into these summer months, July and August, because otherwise, then all of a sudden it's going to be September and then it's fall, and we're running late into the year. Late into the year. And I think people are starting to get antsy about that because, again, we're 6 months into 2022 and we're nowhere near the highs, which is very unusual for the way the market's been so bullish the last several years. Then Wednesday, we shorted the QQQs. We did the Qs. So let's look at it here on the daily. Again, this is a chart of the QQQs. So this was the 29th. Let me find it here. So we did this, fell. Entry was 282.80, shares 1,700, risk 28.90, exit 281.48, profit 22.44. Again, you can take half this risk. You can split it up and divide it by 4. People always say, well, how much risk do you take? It depends on the size of your account. It depends on your size of your account. You should be taking a small risk if you're new, if you're starting out, if you're a beginner. This was a nice quick move here we got on this particular day because then we kind of reversed. So this was, again, the 29th. We shorted it, got in, got the drop, got out, boom. We were in and out of this trade. In the first 20 minutes of the day, it was less than that. And again, summer trading, don't want to sit around all day. I never trade 6.5 hours anyways. If you want to hold something, I think it's much, much, much easier and better to take an options trade. Of course, in an option, you've got to get the timing right, but you don't have to worry so much about the wiggles and jiggles of the market. And then you don't have to worry so much about like the FOMC minutes that are coming out this afternoon or economic data that comes out sometimes later in the day or news things. If you stay in something and you really want to hold it, and particularly if you want to hold it overnight, I think options are a better way to do that. And then we did on Thursday. This was the last day of the week because I closed the room Friday. We did the market again. We did the market again. I mean, the moves were there in the market. This was a bigger move than on this day here. This is the 30th. Market closed here, gap down, fell. Again, this was Wednesday to Thursday. This is a daily chart. We entered it here at 280.55, 1,700 shares. Risk was 29.75. Exited at 277.90, 45.05. That was a nice move. That was a fairly big move. We had a good exit on that too, but again, was not a low of the day exit. But you never know when something's going to reverse. And when you're day trading, it's extremely important to make sure that you book the profits. You only have between 9:30 and 4 to get in and out to make money. Again, I call it chunking it out. With an option, you can give it a little bit more time. But sometimes if you take an option, maybe you want to get out of half the trade if you get a move in the morning in something. Maybe take 2 contracts. You get out of one, you hold the other one, something like that. You know, it's good to book money. And I think that's another mistake that people make too. They want to hold everything, hold everything, hold everything, hold everything. You know, like I thought 275 this particular day. Again, we were out way before that. It did not get quite to 275. It tried. I think it was like 275.60 or 275.50. It didn't get to 275. So if you were trying to get it to 275, you would have given back all the profit. So that doesn't make any sense. Anyways, here was the gap. This closed here. Again, this was the 29th. Then last day of the month, gap down here fell. We shorted it, got the drop. And again, we were out before here. I thought we had a good exit on that though. Any questions on that? So that was Monday, Tuesday, Wednesday, Thursday of last week. And then Friday, I closed the room for the holiday. I don't think it's good to trade around a holiday. And we were off. And then Monday, we were closed for the holiday too. So anyways, talking about the philosophy behind the system that I do, I'm looking for a high probability of directional bias for the entire day. In the case of the trades that we talked about, Nike's a good example. I'm looking for the move to continue all day or close to the close. Doesn't mean I'm playing it all day, but the idea of shorting is I want a big fat red bar. Just like the idea of going long is I want a big fat green bar, okay? We're trading momentum. I want a big move in the day and preferably an early confirmation of my bias in the move. And then again, I'm looking for very precise entries with follow through. That's the whole idea. Again, the follow through, which is very important. And again, you're seeing a lack of that right now in the market. You're seeing a lack of follow through in the market to the upside. Now, how do I pick which gap to trade? Well, I have a system that I use every day. It's a checklist, just like we talked about with the map earlier. And I said, you get up and you're going into the market every day, not knowing what's going to happen. So I do all the work in the pre-market. In the morning, I get up early. I rate my gaps. I determine if I'm doing nothing or something or how many things I want to look at. I also look at the market. Now, we happened to do the market a lot last week because the market was gapping and the market does have big moves, okay? The market's had a lot of big moves lately, at least this year for the first 6 months of this year. But we do look at specific stocks like we did the Nike. It's a checklist that I go through. Excuse me. And if you decide you want to come and learn from me, this is what you'd learn. So I teach a 2-day class and it's once a month. You would learn the rating system and I go through it. And I go through this process myself every single day. And again, you can use it for options or day trades. We're talking today about the fast trades. So we're specifically talking about the day trades. But it's the whole idea of being able to predict what is going to happen before it does. I'm not talking about 3 weeks from now. I'm not talking about where the market's going to be December 5th of 2022. I'm talking about between now and 10 a.m. I'm talking about between now and 4 o'clock. Or if I'm doing an option, I'm talking about between now and Friday or next Friday. Okay, so I'm doing the weekly options. Today's Thursday. I didn't do any options today, but if I did, I would be doing something that expired next Friday. Okay, so that's still, when you look at it and think about it, a short period of time to even do an option. The thing with options is you're paying out, the longer out you go, you pay out for so much. So I don't do leaps. Leaps are long-term options. You have to pay a lot extra for that time. We're not predicting what's going to happen 6 months from now, 12 months from now. The idea of being an active trader is to try to make money on a consistent basis, okay? So everything that I'm looking for, when I'm looking for the selling, because again, we're talking about shorting and selling. That's what we've been talking about today. I'm looking for institutional money. And part of the reason that the market has been selling off this year, and again, I've been talking about this on TV for the last 6 months, is that the institutional money isn't coming in to support the market. If it was, we'd be near the highs. We'd be back up over the highs. We will be anywhere near halfway through up to the highs. Institutional money is not coming in buying the market to support people's positions right now, whether they're retirement positions or just regular stock positions that people own outright. And if you're a swing trader, I don't swing trade, but if you are, you understand that and you know that and you see that and you're seeing your positions fall off. That is part of the problem with doing this idea of buying the dip all the time and then trying to predict exactly the low. You can't predict the low and you can't predict the high. And that shouldn't be your job anyways. Your job is to make money. You have one job every day when you get up to make money. And so I'm very strategic when I'm looking at it and I'm trying to pick what to do. So again, it's momentum. So here was a gap we did. I don't have this trade in here, but this is a good chart. That was a recent chart we did back in the middle of June that shows you momentum. This is UAL. Everybody knows this stock. This gap down, this closed here, gap down, fell. So this is what I mean by, number one, a gap. Also was a short. Okay, we did it as a day trade short, but also it shows momentum. It's a big fat red bar, okay? So from the tippy top up here around 39 and change, for this to be down all the way here at 36, that's a big bar for UAL. Okay, again, this is a daily, and then you see the volume. So momentum is what you're looking for every single day. You're not getting much of that today. Okay, little tiny bar here in the market, little tiny bar in everything. Again, probably waiting for 2 o'clock to see what happens after that. But the whole idea of trading momentum is what allows you as an individual to make more money rather than making 5 cents, 10 cents, 20 cents, or basically scalping. So momentum traders take positions in stocks in anticipation that the stock will have an explosive move. Like UAL was an explosive move. Nike was an explosive move. We got that right. Even though we got stopped out of that first trade, that was a short, okay? Again, that ended up coming all the way down to 103. This enormous move that you get in one direction, and again, we're focusing on shorts today, it happens fast, it happens quick, and again, we're looking for it to happen in the gap. So momentum trading is one of the most profitable and fastest ways to make money trading. Why? Because you want it to come in pretty quick, pretty quick. And again, for me with the day trades, it's early in the morning. As far as options, I'm looking to get a move, like I said, within a week. And that's still fast to me. Okay, any questions here so far? So let's talk about summer trading. Someone was asking about options earlier. I think it was Anna. The idea of summer trading, you know, you can do swing trades if you want, but I think options trading protects you because you can only lose in an option what you have at risk. If you take one contract, that's all you can lose, whatever you paid for it, or 5 or 10. Swing trading, people are getting beat up this year. I'm getting a lot of emails from people that are getting beat up this year because they're taking positions in stocks, they're holding them overnight, okay? They're on 2-to-1 margin or even cash, and then they get up in the morning and they're down, okay? When you take an option, you have a fixed risk, even though you have a set time that the position has to go in. And again, you could give yourself a cushion out. If you want to do something out for 2 weeks, you can. I think 1 month is long. I'm doing the weeklies, but it's an easier way to, I think, have a big move overnight with a lot less risk by getting overnight moves in stocks and the overall market, which we've been getting by taking an options trade. So we're just going to go over, this was one that we did. This chart has been such a fabulous chart. We did target. I have to look at when target earnings are for this summer, probably the end of August. These usually come out at the end. This is a retailer, again, that has been struggling, like many of them, overstock and inventory and everything else, and the earnings weren't so good the last time around for Target. So we did a trade in this. So again, I have an options newsletter where the trade gets emailed to you. If you want to take it, you take it. This was sent Thursday, 6/9, 2:18 in the afternoon. It was the 155 puts that expired on the 17th. So let's go look at it, 6/9. There we go. And here's the move. Again, boom. This is what? Selling. So we did the 155 puts. It dropped through the strike, into it, past it, get the drop. okay? And actually, this is another one. If you held it to the very, 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 very last day, you could have made even more money. I didn't think it made sense to do that. The trade was up way before that and was up a lot, which I'll show you in a minute. But the reality was this came down and broke 140 on the 17th of the day of expiration. So this was one that cost, I thought it was pretty cheap, $260 for one contract. So 30 contracts, which is an advanced trader risk of 7,800, sold at 13. This is way before the 17th. This is on the first drop that I just showed you. Profit 31,200. Return on investment was 400%. I didn't look at what it was the last day. I know it was more than that because again, it was almost 20 points for the strike. But the idea of holding something the last day, I think you really take a chance in doing that. If you had a beginner risk of an average of $1,000, 1,044 contracts, your profit was 4,160. Again, how much you risk should depend on the size of your account. If you have $10,000 in an account, you could take a risk like this. If you had $2,000 in your account only to trade options, this would be too much. That would be half your account. Anyways, a really nice trade. Again, this is taking it and getting the first drop down. Same concept, trading the gap, shorting a put as a short. And again, same philosophy, the momentum, okay? A lot of people struggle with options. And again, I'm not gonna talk too much about options here today. Let me just go back to this. The idea is to get the move pretty quickly, which we did here, in your direction, the direction you're taking the trade. Again, a put is a short, a call is a long. So I'm buying puts and selling puts, I'm buying calls and selling calls. It's directional trading, it's momentum trading. I'm not doing any fancy types of options. And again, this is something where you're not in and out of it for 5-10 minutes, okay? You're taking it, although theoretically, this went the first day. You could have got out of this actually the first day, but it was a better move if you held it a little bit. And you had time, because I called it on the Thursday that expired the following Friday, okay? Anyways, everything I do is about high probability. So there's no 100% in the market. You have to accept the fact that some of your trades are going to lose. So that's why you can't risk your whole account or even half your account in a trade. You have to put the odds in your favor. You put the odds in your favor by saying, this looks good, this rate's high, therefore I'm gonna do it. And again, I'm trying to pinpoint and doing one thing a day, just like last week. And again, we did 2 trades in Nike, but it was the same ticker symbol, okay? So the whole idea is I'm reading the price of the gap, and then I'm using technical analysis on an advanced level to pinpoint which stock to trade that day and what direction. But again, I prefer to short. I've always preferred to short. So let's talk about another one we did. We've done a lot of trades in the SPY. This was a great call though. This was back at the beginning of June 9th. Actually, it was the same day we did the target. So I called this a little bit after the open. The 409 SPYs, it expired on the 17th. Cost was $575. I didn't think this was crazy. Although the put prices for the market has gone up this year. 15 contracts, risk was $86.25, sold at 36. Profit was $45,375 with a return on investment of 526%. So let's look at the chart. Again, the 9th, the 409s was here. So again, came down in here, fell, dropped, boom, boom. And if you held this the very last day, again, you had a better exit. I don't think it makes sense to do that, but ultimately, here's where this one went. Again, the 409s, this was the 17th, look. Came down in here to like 360. Look at that. I mean, that was insane. We captured it at the right time. We caught it at the right time. We got the direction at the right time. Again, the momentum was in our favor. This is the drop you want. That's the drop you want, okay? And we got it. Now, if you had taken a smaller risk, if you did 2 contracts, 1150, sold at 36, profit 6,050. Again, nice trade. You could have held it longer. Really nice trade. Again, that is a put, okay? That was an option. So a nice move for the market. Again, we'll see where the market goes by Friday. I'm going to be really watching it. But time is money. We've been talking about this all day today. I know I only have a few more minutes left. But the whole idea of trading is to put your money to work for you in the shortest amount of time possible. Otherwise, your money is tied up into a trade. say, again, people are in swing trade positions right now that are down. They don't want to exit them with losses. They don't even want to exit them if they're up because they were up more at the highs, and their money is being utilized and used up. They can't use that money for anything else, okay? So it's one of these things where you have to choose what you're doing. Active trading is just this, you're in and out. But I think a lot of people do not have the proper education. They don't know how to trade. Again, people are trading blind. They're taking ideas from other people and they don't know why they're doing them. They don't understand the strategic reason for why they're doing them. And a lot of people don't even know why they're trading at all. What are your financial goals? You really need to get clear with them. Why do you want to trade? You want to make extra money while you have a full-time job. Maybe you're retired and you want to make extra money. You want to quit your job and do this full-time by 2023. Write it down on a piece of paper. Think about it. There's so many people out there that want to trade and so many people that want your money. When you go into the market, you are not creating something. You're not knitting a sweater and selling it to somebody. You are in there, you yourself, this is an independent activity, okay? You come and learn from me, but you're the one taking the trades. You're pressing the button. You're risking your own money. You have to really decide this is something that you want to do. It is an investment, but it's well worth it if you're going to give it your all to do it. I think a lot of people, like I said, don't really ever give it their all. They do a little bit of this, a little bit of that, and after a couple of years, they're down money. They paid for classes, they didn't really get into them, or they didn't work, and they've lost money also trading. I threw myself into it, and that's how I was successful, but I do think it's important for you to invest in yourself as a trader. Part of that is a class, part of that is education, and part of that is really thinking about what you're doing when you're trading. And for me personally, again, take all day. Oh, thank you, John. Take all day. I'm pretty tired. I was up early this morning to be on TV. I don't think I can talk all day today without caffeine anyways. But when I get up in the morning, I'm looking for, is there anything good to do? Like today, we didn't do anything. I didn't do anything today. Didn't do any day trades today. Didn't do new options today. I said, this is slop and chop. We have to wait. We have to wait till tomorrow. We have to wait to see what we're going to do. Again, you've seen what's been going on in the market all this year. Sometimes it's better off to just take a day off and take a step back. If nothing meets my criteria, then I don't do any trades, okay? And that's okay. So if you decide you want to come and take my class, it's a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate each gap to trade each morning. Since there's so many stocks each day that gap, using a system is significant to your success. My class is called the Golden Gap Course. It's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class is online and I teach it once a month. So the next class is a couple of weeks from now, end of the month, July 23rd and 24th, 9 a.m. to 5 p.m. Eastern time. Class tuition is $69.99. Class is online. You can be anywhere in the world and take it. Now, I am doing a July 4th special only till Friday. So today's Wednesday. If you decide you want to come and learn, the special is good till Friday. It's for the Golden Gap course and the Trends course. It's called the Golden Gap Course Combo. It's $74.99. You get 2 classes, and then you would get the trading room free for 1 year and the options newsletter free for 1 year. This helps you if you want to get the calls, if you're not sure if you want to do stocks or options. It gives you both. Again, the options newsletter is separate. Those are emailed to you. The room is a live room where you must attend live. If you would like a trial, you can email me for the next 2 days. We'll see what we get Thursday and Friday. Again, like I said, it will be a significant day for the market, but we'll know in a couple of days. Any last minute questions here by anyone? Listen, thanks for having me, anybody. Oh, go ahead.
Hey, Melissa, is there a link for them to go to get that, or you just want them to email you?
You just email me. Email me your questions. Email if you want to trial. Email me if you want to sign up. And thanks so much for having me, Sherry.
Thank you for coming back again. I always love it when you do. You do a great job, and clearly people enjoy your presentations. So we're looking forward to having you back again. So thanks, and thanks for being on time.
Of course. Thanks, Sherry.
All right, I'm sending this to everybody. There's Melissa's email. And anything else to finish? Anybody got a question or two? She's still got 1 whole minute. I really think that you're going to hear from people, and going to go ahead and move this back to me. And you have a wonderful day, my friend. And then that was Melissa Armo of the Stock Swoosh. I put her email address into the general chat. so that you all can get a hold of her. And our next speaker is here and ready. But first, I have to let you know that, just a minute, I got something covering what I need to say. If you have to leave early, we do post this on our website, tradersexclusive.com/archived_webinars. You'll also get an email from GoToWebinar with a replay. You'll also get emails from our speakers. So please take a look at those and know that that's part of the deal for them coming and doing this free training for us. Next up is Paul Lange. Whoops, there we go. Paul, thank you. Disciplined Trading Strategies, LLC. He's talking to us today about ordinary moves. And he started Disciplined Trading Strategies in August of 2017. Disciplined Trading Strategies is a site for traders and investors. He runs a very popular day trading room and also publishes The Long-Term Trader, a portfolio for hands-off long-term investors. He also provides a ton of free information. Wait till you see his website. It's on the Disciplined Trading Strategies free stuff page, which is really easy to find. And he provides assistance to new people on his website, and also the best seminar program for those that are interested. Paul's a very experienced trader / investor with 20+ years in the trenches every day. Thank you for joining us, Paul. I'm going to make you the presenter now. Let's just see if I can manage this. And you're going to have to unmute yourself. And do you like to see the questions on the fly, or do you want them held until the end? I know you're there, Paul. Where are you? On the fly.
Hi, Sherry,
okay. There you go. Hi.
There you go.
Good
Hi.
to see you again, quote unquote.
You can put them on the fly as long as I can pull up my screen here to see them. But if I miss them, maybe you can help me at the end. I always try to.
All right. Yep. Now I can see your screen. I don't think it's what you want us to see though. Maybe you shared the wrong screen.
Well, yeah, I tried not to share anything. Here we go. There we go.
There we go. Yay.
Ordinary
Take
moves.
it away. Welcome
All right.
again. Thank you for joining us.
Thank you. Hi, everybody. This is Paul, as Sherry said, from Disciplined Trading Strategies. The ordinary moves is what I want to talk to you about. And that is just simply a slide that shows what you probably already read on your invite. And if you didn't read it, you probably don't want to read it. So I'm just going to move on. Doing a presentation here with Sherry, I don't really love doing outside presentations. I do a ton at my own home at Disciplined Trading Strategies. I do with Sherry. I like Sherry's format here, and I think she has a good setup here with legitimate people here. A lot of times I don't like doing outside presentations. I turn down a lot, but I've been here with Sherry every time she asks me. But when I do something somewhere else, most of you don't know me like the home group does at DTS, which is Disciplined Trading Strategies. So I just want to give you a couple of quick bullet points about me. I'm not going to discuss who I am. Sherry gave you a quick run through because you probably don't care unless you like what I have to say. So at the end, I'll put up a slide and talk a little more or give you a chance to ask about me if you want to. I'm a little bit different probably than what you're going to hear when you go to presentations like this. I know when you sit there and you listen to person after person, it may kind of run together after a while. But I look at this as an opportunity to just maybe to share some knowledge and to show off for you a little bit if it were. I do offer a tremendous amount of free information at Disciplined Trading Strategies. And maybe Sherry, you can throw the website out there, the free stuff page, the link. I put it in our little chat if you can do that.
I can do that. You want me to do it right now?
Yeah, that's fine. They can go visit while I'm talking here. I consider it to be the greatest source of free information out there for new traders, of legitimate information anywhere on the web. And that's a big statement coming from a little guy like DTS. But there's a lot of information out there, but most of it is fairly useless. So I think you really will enjoy it. It also gives you a real good chance to get to know me because a lot of the information are prior events that are recorded that you can go through. The actual information goes all the way back to the beginning of DTS 5 years ago, but a lot of that is on the archive page. When you go to the free stuff page, it's just the most recent 10 or 12 videos or presentations, whatever it is. I just want to see, Sherry, if I can pull out the, oh, here, questions. Is that what I want to see, questions? Yeah, I think so.
Yes.
Excuse me 1 second, folks. Okay. I dislike the GoToWebinar format. There we go. Ah, there we go. I can see you guys typing now. Perfect. Okay. So I do have a lot of information. I'm also quite willing to help anybody who just wants some help. I respect somebody who wants to learn to trade or invest on their own without getting help, because that's what I tried to do. In hindsight, I don't think it's the best way to go about it, but I do think it's necessary for some people to try it. That's what it was for me. I had to go try it and kind of mildly fail at it. So I'm willing to help you do that. And a lot of stuff my website, on my webpage does that. I'm even willing to meet with you and get together and look at some trades or do whatever you want to do. I have a little different attitude than I think a lot of people in the business, because I'm kind of, how would you say it? I just enjoy doing this. Sure, it's a business for me. It makes money. It's great. But I'm doing what I want to do. And I'm just showing people along the way. And I'm very proud and have taken a lot of pride in the number of people that I have trained that are just pulling money out of the market, and the number of people that are in the trading with me that make money all the time. I'm very happy about that. It's something I take a lot of pride in. So I have a laid back attitude. I don't care if you ever sign up for anything or don't sign up for anything. I'm just here kind of having fun for the next few years. It's a time in my life I really enjoy doing this. I enjoy sitting here every morning trading. I'm very relaxed all the time, very calm. So what I want to do is simply show you the best that I can, what I do and what my view is of what I call the language of charts. In other words, how to read charts. There are several presentations on my site that discuss the fact that there's only one way for people to make money in the market, and that's to understand charts. A recent presentation I did, if you go to the free stuff page, matter of fact, the last one is simply called charts, and it's a must-view video. If you think that you are ever going to make money listening to analysts, reading fundamentals, understanding earning reports, or any of that crap, you're wrong. You never will, and that's just a fact. That's not my opinion, but I actually prove it in that last video. If you want to take a look at it, called charts on the free stuff page. I don't want to, as we go through this, I don't want to fool you in a sense, because I'm going to show you a bunch of trades from last week and show you what I mean by ordinary moves and how you should make your bread and butter from ordinary moves. Now, once in a while, you may catch a nice winner, and that's great. I have nothing against that. I try and do that. But many traders feel they have to make their money trying to find these crazy stocks that move tons every day, or these crazy little $2 stocks that go up $3 a day. You're never going to make money doing that, not on a consistent basis. You can do it occasionally, and once in a while, I like to find something that has a good move, or sometimes I'll hold part of a position for a bigger move. But what makes sense to me is, and to anybody who really kind of follows my way of thinking, is that every day, every stock makes a certain move, right? Just a normal everyday move. And if you can capture that normal move, how easy is that? Because you have such a variety of stocks to choose from. Most traders, and most of them are new and most of them are inexperienced, do the exact opposite. They look for the crazy stock that's going to have some ridiculous move. Now, I go for some that have some nicer moves, some of the things we look at, but you make your bread and butter just from ordinary moves that every stock's doing. That's what I'm going to show you right now. I also want to point out that you got to be a little careful attending an event like this, because I'm going to show you a bunch of trades, and people sometimes walk away trying to duplicate it by looking at the end result. You're seeing the end result of a fair amount of knowledge. So you can't walk away and not understand how I got there. I'm going to try and explain it to you, but naturally there's a lot of underlying, educational material that I know that gets me to say, this is the stock I want to look at and this is what I want it to do. So sometimes people get disappointed because they try to duplicate it, but you can't duplicate the final product without understanding exactly how I got there. There's never a deal, a DTS or anything. I never have a sale. I never have an offer. If you feel you want my help, you want to sign up for something, you go sign up. In the meantime, I don't bother you about it. If you sign up at DTS to be a free member, and sure, if you don't mind, throw the homepage out there too. On the homepage, if you look down at in the lower part there is a little box you can check to become a free member at DTS. You don't get harassed with emails. You occasionally maybe get an email, where I'm bragging about something, but generally they're just invites to events like this one, except they'd be a DTS. and other educational emails. So there's no harm. I never sell or trade your email anywhere. If you want off, you get off and you never hear from me again. So it's very harmless to sign up for that if you want. So with all that prerequisite, let's get going here and look at some charts. Is that what you all want to do? Take a look at some charts. When we look at some charts, I'm going to use some generic terms so that you understand me. I don't want to try and flood you with terms that I use necessarily to the seminar students, but these are terms you've likely heard, but I want to make sure that you understand what I'm saying here the best you can. What does ordinary moves mean? Well, I kind of explained that already, but let me first go through what does not work consistently. And this is just from me doing this for 22 years, and more importantly, from me teaching people how to do this for a very long time. I know what most people go through. I know what they try and do. I know the shortcuts, and I know that, remember, most of you out there listening to me probably have taken what you would consider to be some kind of education. Maybe it was you read 2 books, maybe you watched an hour-long video, maybe you signed up for something that cost a lot of money. Most people that come to me have already paid for a full education program and they're disgusted, right? Any of you ever done that? Anybody care to volunteer that? Because it's a very common thing. Like I just said, my most common student, well, maybe not most, but maybe tied for the most. My other most common student is somebody who's never been in the market. My favorite student would be somebody like several people in the room with me now. Several people have taken the recent seminar program with me. They're people who didn't know a stock from a bond 2 years ago. And they just decided they got interested, whatever they saw, they found me and they like me, they signed up and they're making money. That's my favorite type of student. Here's what does not work consistently. This concept of trading with tight stops, that doesn't work. Tight stops makes you stop out a lot. The exact opposite is what you should do. As a matter of fact, there's a saying out there I love that goes, new traders go broke because they don't follow their stops. Experienced traders go broke because they do follow their stops. Naturally, you have to have a stop in place, but most people use them so poorly that they lose money from them. High volatility stocks, you're not equipped, I'm not equipped to handle high volatility stocks. You probably are not either. Make your money from ordinary stocks. Crazy stock of the day, same thing. I occasionally look at them, have some fun with one, but it's not the bread and butter that you should be using to make money every day. Crazy ideas about RR, that means risk reward. You probably heard people instruct you that you have to have a certain risk reward, like 3 to 1 or whatever it is, and that is kind of nonsense in a way when you understand the full math of trading. If you had a stock that I told you the target was 1 to 1, but you had a 90% chance of getting there, would you take the trade? And the answer is, of course you would. You'd be silly not to. Always playing breakouts, always expecting the big move, always expecting you're going to get in the stock on ground zero. That's great when you can, if you have the knowledge to find that. But most of the time, people take the breakout type of move where they should have been shorting the breakout type of move and vice versa. Thinking new highs is always safe. A lot of times new highs has more selling going into it than you would ever guess, but people don't understand that. What I want to do here is whenever I show trades, I always take the recent trades I've done. I don't go back, weeks ago to find some trade, whatever it is. I try and make my point from the most recent trades. Now, Monday was a holiday. I had to prepare this yesterday. So I went back and I did trades from last week. Last week happened to be an exceptionally good week. If it wasn't, I still have to use the trades from there. But I want to show you I'm not cherry picking good trades. I'm not just saying here, we have some winning trades, we have some losing trades. Last week was a very good week. But I want to show you about 7 trades, and I want to just show you, I'm not picking the great trades and showing off, I'm just showing you what I do every day. So that is Monday and Tuesday of last week, and you can kind of see the breakdown here. They're like 5, I normally do about 3 to 4 trades a day, so there's a couple extra trades Monday and Tuesday. And you can see the breakdown here. As we go through the trades, you'll see another copy of that, and the totals for the day, and a quick little description of what it was. That's Monday and Tuesday. Wednesday, I kind of didn't even trade. I took one little trade on the market long break even. It was a terrible day Wednesday to be trading. I knew that. It turned out to be right, and I just walked away at 10 o'clock, was done. You can see most every day I'm done trading 11 o'clock as a day trader. I also want to point out I like long-term trading too. This happens to be about day trading. If you want to see this exact presentation, but done with long-term trades, go to the website and go back and find the ordinary moves that was from June of last year. It's 6/30 of 21 from last year. And you'll see the same presentation with long-term positions instead of day trading position. As a day trader, I like to be done by 11 o'clock every day. Then here's Thursday and Friday, 2 trades Thursday, 4 to 5 trades Friday, 1 was a repeat. and a nice week. So what I want to do now is go through and pick out about 7 of those trades and show you what I mean by the title presentation today. When did I start? 12:45, 1:45. So I have till 2:30, right, Sherry? 2:30. So I'm only, is that right? It seems like I've been talking a long time, right? Okay.
Yeah, you
Right,
have
I
until
have a half hour,
2:30.
right? Okay, all right.
Yep.
All right.
No,
All
45
right, good.
minutes always, but you have
Good.
until 2:30.
Okay. So here's the first one. And this was Goggle, G-O-G-L, 60-minute chart. This is the daily chart of Goggle. This is the 60-minute chart. And here's what I like to just kind of just do a little education about what I do here, the best that I can. This is after the day of the trade. So that green bar is after the day of the trade. The 60-minute chart is after the day of the trade. And the questions I have in each one of these is why be bullish? This is a long this day. Why bullish on this particular setup? And the reason was because the daily chart was in an area. Now keep in mind, this is not a good daily chart to be long in terms of the daily chart. You would not want to swing trade this long. It just for a one-day pop, because we had two things. We had this gap up, a little gap up, not a big one, but a gap that ended up clearing the prior day. And we had this kind of quasi support area. It's not really a support area, but kind of a support area. And all I wanted to do is get that morning pop out of it. As a day trader, that's all we need to do is to find that little gem. Most of my trades I like to keep for a half day or a full day, but sometimes you know that your time is up early in the morning, and that was the case here. Note the pop here, and I want you to keep an eye here. See that red line is where there's going to be a lot of resistance. So in this particular case, I'm just looking to get up to that red line. Now, if it took all morning to do that, that would be great. So those are my targets. Now, what I'm going to do is I'm going to switch to a 5-minute chart so I don't lose you. This is Goggle, the 60-minute chart, the daily chart, the 60-minute chart. Here we are on the 27th. That was Monday. Now keep an eye on it. Here's the 5-minute chart. There's that little gap up. Okay. So entry right in there, and you can see the numbers down here, the entry, the stop, and then I took 3 targets on this. All right. Now it had a very nice immediate pop. I call that the free money. So there's, again, what I'm calling an ordinary move. We're just kind of running back up into yesterday's resistance. That's all that it is. And because we had such a nice initial move, and by here I really reached my target area, I cranked out 3 targets pretty quick. So I was done with all this. You can see the last target was at 10:08. So I was done with all this fairly quick. I don't normally do that. But when you arrive at your target, guess what? You kind of have to take it. I have a flashing, okay. So you have to take it. So I did, and it ends up making, it wasn't a huge profit. It was what I would consider to be the day's goal, making 1 R a day, 18 to 20 hours a month is what I think you should have set up as your goal. And this did that in a half hour, so it was fine. But again, what I want to emphasize, I'm going to go back to the other chart real quick. What I want to emphasize is that that was the move that made that money. Not some miraculous move, not going to new all-time highs, not some crazy stock that went up 50%. Just a move that this stock does every single day of its existence. How do you make money from it? By shorting the high and covering the low, or by going long at the low and covering the high. You have to know how to find those, and that's what the language of charts is all about. So that's trade number 1, Goggle, 3 targets, done. That same day then on the 27th, the next trade was On. On was also a long. And it's kind of a similar concept. We had kind of a daily support area on, that was this day here. And we had gapped up and cleared a good part of the prior day. We don't have to clear a lot when you're coming off a little bit of support area. You're gonna get a combination of some short covering, and you're gonna get a combination of some people going long thinking that's the bottom for a while, even though it's not going to be. So we had the same thing, and excuse me. This was the prior day, what it did. It gapped up off there. When a stock gaps off the bottom like that, it may get sold, it may held. What was bullish about this was because it held sideways right through here. I think you can see my cursor okay. And that's why the next day it was on my watch list. I scan about 1,000 stocks every night getting prepared for the next day. 300 of them high volume charts, and then about another 700 that are lower volume daily stocks. And when I saw this on my hourly chart, I was like, okay, we gapped up and we held like a rock. So I want to take this little pop as it comes over the base the next day. Well, what happened the next day was it gapped up. Now watch where this target is. The target is right there, and you're saying, well, how can you do that? That's where it opened. Well, go to the 5-minute chart. 5-minute chart, here we go. It gapped up, right? And then I took this pullback, just looking for it to come back to retest the high. I felt there was a very high odds it would do that. It's all about odds, as you probably will hear everybody who speaks today say, because it's true. It's all about odds. So I got in here on that pullback. Now I got in a little bit early. And if you look at the numbers, I got in over 53.11 and stop under 52.60. As it started to drop, I increased my stop a little bit. I gave it some wiggle room in there, which means I was willing to take a little bit more than a full loss. My answer to that is, who cares? I'm not going to let it go to a huge loss. I'm not going to lose part of my account. I'm not going to go crazy, but I'm going to give it some room. And there's a very specific way that you do that and how you should figure out how to do that. And what that did was it actually had taken out my original stop by a nickel. I saved the trade and it turned out to be a nice winner. So if you look at the numbers, you go back and say, wait a minute, didn't that stop out? It's not shown here, but in the room, I formally post, hey, I'm going to let this go down to a different number, gave it more room, and then it comes back. Target one, because of a decent entry, was what I call the cheap third, just kind of getting safe with it. And then I walked away. I left the screen for about, I don't know, half hour, 45 minutes, went and did something, came back. When I came back, I saw it just kind of topping out here and decided to cap the second part of it. So the second part of it turns out to be a really nice move, about 2.3 R, which means more than double risk reward. 2.3 times what I had risked. It had moved during that period of time on the back 2/3. So again, just a normal move, a bullish gap up that kind of crashed in. And by the way, you got to be careful on these because there's a big difference between something that slowly comes down to fill that gap that's usually not bullish despite popular belief, and something that has that little flash crash the opening minutes of the day. Next stock, Piton, P-T-O-N. Here is a setup, and this is going to be a short this day. Here's a setup this day. This is the day of the trade. Why be bearish there? Well, because the daily chart had just rolled over in a downtrend. So the daily chart agrees this is heading lower. And then we have this wide range bar on the hourly chart. Those are good things to look for. These big red bars to start moves. We came back about halfway, and now I'm interested in shorting. Now keep in mind, when this goes on the watch list, I don't know I'm going to be trading this. I have many stocks I'm looking at in the morning. I try and reduce it down to a couple of handfuls, and then I need to see certain things happen for me to enter the position. So this did just what I wanted it to do. It actually gapped down a small amount. And when I say gap, it opened just a little at 10 cents or something under where it closed. But that's kind of critical to me sometimes. So it opened a little bit under there. And again, I'm going to flip down the target and note the target. The target is simply going to the next logical stopping point on the daily chart on the way down. So this is just kind of a normal, look at the daily chart, right? There's another 10 bars that are this big on the daily chart. So I'm not going for any record moves. Just a normal move to this first support area. I took a cheap third along the way. Here's the 5-minute chart. This is a nice entry. That's a really nice entry. That's not what a lot of traders do, is they wait to short till you're down here or something. Now, on a move like this, you would have made money, but how many times you don't get that move? So what I did was I take a third of it right here, so that even if I was wrong about this stock going lower, by taking the third at the first support level, it means this trade is going to be a break even for me. And you may not think the math worked, but it does, because I usually give the original trade a little bit more room. So 1/3 there, and then 2/3 is a walk away, meaning I'm gone. Just hope it drops, walk away, let it drop. Believe me, if you're any kind of even an okay trader, you're going to make more money leaving the screen than sitting there. Most of you probably can't fathom doing that, but that's just what'll happen. So target one and target two, I just literally walked back sometime in the afternoon and decided to cap it over these topping. No, oh, here's where it was, right there, that high on that green bar. When I rolled over, I put the trail stop there. Turns out I would have been better off just leaving until the end of the day, and that's frequently the case. So that was Piton. I think that was on, yeah, that's on the 28th. Piton was, and it was a short. EA also on the 28th. Here we have a similar concept here. We had a daily chart the prior day that had a big red breakdown bar that catches my attention. I pull it on my screen, I see that it rallied back part way. It's the same thing. We have what I call a little hourly sell setup here. That's why I'm bearish about this. And I want to just find my entry that next morning. So here's the 5-minute chart. Boom. Waited a little bit longer on this one, entry at 10:30. It had kind of popped early in the morning. I wasn't sure where it was going. Waited till I saw some lower highs, and then as it started to break down right in here, happened to be the perfect entry. So entry under 125.80, stop over 126.60, and a similar concept here. This one here was just 2 targets because I managed to get that first target to a pretty nice target here. So first target 1.7 hours, second target the second half 3.5 hours. And again, these are both walkaways. I wasn't here for about an hour and a half during the time we hit that, and then walk away to the end of the day. You make more money walking away if you're a reasonable trader. FSLY. This was a long that had a bearish bar on the 3rd day down going into a support level. I was never thrilled about this one. What happened was I didn't expect it to have this big bar. I think I originally had it on the screen to look at it short, to short this big red bar. Well, what happened was it had a very sharp drop and came down into, came down into a kind of a support level here. I still wasn't thrilled about it. But then what happened was I got this great little entry concept in here. We hit the bottom, we bounce. Entry, I did what's kind of called a be the tail entry in here. I got in here but gave it some room. And target 1 right up there. Target 2 on a trail stop because it wasn't going any higher. So target 2 gave back some of the profit from the highs in there. So along on FSLY. Again, I just want to go back and emphasize what the point of this whole presentation is. This is just a move retracing back, right? Because the daily chart came off support. This is not my favorite type of trade here. I don't love this one because it is a little questionable as a long. It's only because that big, wide, what I like to call a puke up bar that happened. But making the money just on that little rally back, the same thing on the prior trade here, just making the money on a normal day. Look at the red bar here, just making your money in that normal red bar because you're shorting up at the top and covering down at the bottom. Next one. NEM on the first. NEM was a little tricky because you look at this and you think this was a long, but it wasn't. This was a short that I had because this prior day broke down below that daily consolidation. Now, here's a good case of actually not having the trade right in a sense because there was more money to be made long than short, but it doesn't matter. If you really understand your entries and if you get good entries, you make money on this. So here's the 5-minute chart and there's the entry. And this is a perfect type entry because you have this bearish bar above you. You have this little congestion area. You gap down a little bit, you pop up. I call that the stupid morning pop. Makes a stupid morning pop higher. You get in there short and look at all the money you make just on that little move down. So this is over the day's goal in the opening 20 minutes, right? I got short 937. Covered at 1010, so 20 to 30 minutes for both. Now notice I took both targets here. Why did I take both targets? Because we had such a sudden dramatic drop. When you're taking targets, when you get that big flurry move, you're typically going to hit your low at 10 o'clock reversal time. When you have a slow bleeding move, you can stay with it longer. So I was very quick to take the profits on this one. And yes, it turned out there was a bigger move to the upside. Go back to the hourly chart here, but who cares? I don't know that move is coming. The flow is down, the trend is down. You stay short until you have a reason to doubt that or a reason to be long. There was no reason to be long. Stocks do things all the time. Our job is not to try and anticipate every crazy move. It's to try and find the surest, highest odds type of move and to get in with great entries and capture those moves. The fact that it went higher is irrelevant to me. I got my money. I didn't expect it to go higher. I would never have traded that stock to go higher, but it did. Still made my money in the morning. This is CVS on the first also. And CVS, why be bearish? Well, because CVS is in a daily downtrend. This one is one of my favorite type of entries. And this is the type of thing that very few traders do. I consider it to be the highest odds type of trading, but people that don't understand charts will never do this. And what I did on this one here, the reason this was on my screen was specifically to short the rally back up into this area. You see this congestion area up in here? So we opened down here. I did not want to short this on weakness. I didn't want to short it going lower because it wouldn't work. I wanted to short when it came back and popped into this area. Why do I have the knowledge or the guts to do that? Well, because we're in daily downtrend, we're in an hourly downtrend, and stupid rallies in resistance areas are your greatest way to make money. Not weakness, not after the stock drops halfway to its target, but rather getting in when you're supposed to get in. So here's that entry on the 5-minute chart. And look at that entry. You can see that, just so you're clear here. This little topping tail on the hourly chart, that run up happened in the morning into this prior area. Here it is on the 5-minute chart. There's the run up right in this prior area. So boom, great entry in here, getting short under 93 basically. And falls. Target 1, why here? Because it's at the prior lows right down here. So in case that was all that it had, already made the day's goal basically down there. Target 2 at the end of a big wide range red bar, and target number 3 on a trail, all done by 11 o'clock. Again, I'm not trying to be done early. You see some of these I hold all day. This one though was done. When you're done and you made your money, you have to know when to get out. So that was CVS. I ran through those fairly quickly. Let me pause a minute here because we have 15 minutes left. I have a couple more slides to talk about, but let me just ask you if you have any questions. Do you want me to go back and talk about any of those? This is your time, your opportunity to ask me about anything you want to look at. And I'm not even sure. Yeah, I'm seeing your questions, right? I don't think anybody's typing. Do you have questions out there, anybody? All right, Sherry, there's no questions, correct?
I'm not seeing any either. Oh, here we go. Manuel just said something.
Okay. Oh yeah, somebody asked, I see up above there, somebody asked about futures and about currency. What I teach, Manuel, and also Anna, what I teach applies to anything. It does not matter if you're trading Forex, if you're trading, I do trade futures sometimes myself, but I mostly like to focus on stocks. I like to focus on stocks because I think they have the greatest opportunities, bar none. Because if you're trading Forex, you only have 6 pairs to look at. If you're trading the futures, there's only one market to look at. What I teach, you can use on anything. I have several students that trade exclusively futures and exclusively Forex. Me personally though, in the trading room, we do stocks. And there is a presentation on the free stuff page. It's in the, I think the newbies section is called, that discusses this. It talks about what to trade, and I go through the pros and cons of trading anything that you could be trading. So yes, what I teach applies to anything, but the room that I have and the letter I sent out apply just to US stocks because that's what I personally like doing, okay? There is no offer, Jim. I don't have any offers. No deal. What I have to offer for you is if you want to get together with me and show me your trades, or if you want to talk about anything or how to proceed, or I have a lot of information on the free stuff page to help you advance as far as you can on your own if you're not ready yet. And there is, I'm just here to talk to you, share some education with you, and whatever I can answer for you. But there's no deals on anything, and there's never a deal at DTS. Since I've opened, prices on anything have gone up, and some of them fairly dramatically. It's based on supply and demand. I want to keep the room to a reasonable number of people, so prices went up last week, as a matter of fact. And same thing with the seminar program. It's gone up somewhat since I started doing it, because I want to make sure I can maintain personal training and mentorship for everybody in there. I have fun doing this. All right, keep the questions coming if you got any, but I'm going to just do a couple last slides here. What you should take away from this, you should not take away from this to use tight stops. You probably looked at some of those slides and you're saying, wow, he's getting a good reward to risk because he's using a tight stop. That's not true at all. If you go back and look, they're not tight stops. As a matter of fact, they're wide stops. What I'm doing though is I'm getting very precise entries. I know when a stock is turning. I can teach you how to do that. You can come join us in the room and you can see how to do that. But I get very precise entries from what I'm doing. And by getting precise entries, it allows you to make a lot of money. Again, if you short the high of the day, guess what? You can't lose money. If you go long the low of the day, guess what? You can't lose money. And then if you take that great entry and then give it some room rather than be super tight, you're going to find you make a lot more money. I don't know why so many traders I talk to constantly say that they're going to try and improve their trading by using tighter stops. It's exactly backwards. It's a silly thing to do. There's a totally different concept about what you should be risking in the beginning. In the beginning, you should be risking nothing and then risking $10 until you learn how to trade. I've never seen anything sillier than people that don't have a clue how to trade and they're risking $200, $300, $400, $500 per trade. Once you know what you're doing, you can risk $500, $1,000, $1,500 a trade. That's perfectly fine. But when you don't know what you're doing, it's silly to risk more than $5 until you can prove to me that you can trade. Tight stops is just wrong. It's the way you lose more money. You should always be using generous stops. If you don't believe me, try it out one time. Of course, if you don't know what you're doing at all, if you don't know how to read a chart, it doesn't matter what stops you're going to be using because you're going to stop out of everything, right? It's also not about just buying bottoms at support or shorting tops at resistance. It's a sentence, it's not a strategy. Understanding what support is, understanding the 4 analysis points of support, how it works across multiple time frames is a strategy. So I'm just kind of warning you here when you see these, I'm making them look so simple, right? You just, oh, here's a chart, here's a downtrend, here's resistance. It is simple, but you really have to understand what you're doing. And what I get more than anything else is somebody who emails me and said, Paul, I saw your presentation and you know that trade you did on, well, I did the same trade, but it didn't work. And they show me the trade, and what is the trade they show me? You guys want to take a guess? They send me an email saying, Paul, I did the same trade you did on, but it didn't work for me. You know, what gives? What do they typically show me? You want to take a guess? Yeah. They show me a trade that is nothing close to what I did. It's just complete garbage. In their mind, somehow it was the same trade. But it wasn't. It didn't have any component that I would even look at trading. What should you take from this? Superior technical analysis lets you find those moment in time areas. I call it moment in time areas. It's also really critical. I don't have a slide here about it, but one of my presentations talks about the 3-legged stool of trading. You need 3 things to make money, and that is a superior technical understanding. You have to understand math and probabilities, and you have to understand, whether you want to call it psychology or experience, you have to understand all 3 of those things. You will never be successful. Even if you know how to trade, you'll never be successful if you don't have the confidence and or psychological makeup for it. So you have to have all of them. It's what I teach and what I show people. It's critical. For some of you, this may be theoretical today. You see and you get the concept, but you are learning and you do not yet have the knowledge to find and execute exactly what you see. This is something that may be true for a lot of you. For some of you, this may be helpful as you can find those moments. For some of you in the middle, it may be frustrating, but at least you see the goal. I had these in here by a time. This is not a critical slide to me. I talk about this sometimes. Is that when you learn how to read charts, you have the odds in your favor at that point. And it's kind of synonymous with owning a table at the blackjack casino, not playing in one, but owning the table, right? You have the odds. The odds, if you are at a blackjack table, are 52% in favor of the house. But what I always say is, even if you have those odds, in other words, even if you're a trader that knows the chart somewhat, you have to fully execute those odds. In other words, if the casino did not keep up with surveillance technology, if the casino did not do background checks on the dealers, if the casino did not have well-trained pit bosses, the casino would lose. In other words, just because they have the odds built in doesn't mean they maintain them if they're sloppy. And it's the same thing with traders. I like that analogy, that you can learn what you're doing, but most traders I see then go off the rails because psychologically they're stupid and they don't understand the math and probabilities, and they lose their edge, so to speak, that they maybe had from understanding charts. And that's why a lot of traders, you know what, most people who take some kind of training walk away simply saying technical analysis doesn't work. And it's only because they either really didn't learn it, or they didn't, you know, it could be their fault, or it could be wherever they learned it didn't teach it properly. I know very few people, places that can really teach technical analysis to the level you need to make money. You can learn technical analysis anywhere to a level where you will lose money. You can sound smart and you can say all kinds of intelligent statements, but you need a whole nother level of understanding to make money. And that should be your goal, obviously, to make money, not to be able to talk about charts at a dinner table sometime. Chart reading is the only way to make money for 99.99% of us. If you're here, you probably realize that. Make your money on normal rules. Make your money on normal moves. Save the home run for when appropriate. Play with the house's money. I like going for the bigger moves. Sometimes you saw one of those trades, I think it was Piton, had a huge move. It was like 3.5 risk units on the back part of it. But I don't know many people that can stay with that the entire time, because what if you get up 1.5 risk units and then it totally backs up and you go to a losing trade? These are the issues of management that people struggle with. So I have set up something that I teach to people, and I think personally the way I apply it works for me. You can apply it slightly differently to make it work for you, but I do something where I'm able to stay with trades and yet not necessarily give back a lot if I'm wrong in staying with them. So I like to go for those bigger moves, but before that happens, I make my bread and butter just on those ordinary moves, right? So let me know if you have any questions. I have 5 minutes left for questions here. If you've enjoyed this presentation, there's 3 things you can do. You can visit the free stuff page. You can email me. Sherry, can you put my email in there by chance? I don't know if I can type it. Paul, this is paul@disciplinedtradingstrategies.com. You can email me if you have any questions, or if you can't get my email straight, if you go to the homepage, you'll see the email. You can email there, or you can go to the contact page and just send in a contact form, whatever you like. But if you're really serious and want to join us, you can come join us in the trading room. You can take a trial of the trading room, join us for a week. You can pay for a month and join us for the month. You can also find out if you're seriously serious about seminar program. Most people don't do that for a while until they get to know me, and I suggest that you don't sign up for a seminar program until you really get to know your mentor, and until you have decided to make the commitment to put in the time. It's not much money. Money is not the issue, or it shouldn't be. It's the time. You have to have the time, and I have on the site what I call a 100-day program schedule for people who are interested. I have set up, if you're kind of quasi, semi full-time at it, a 100-day schedule of how to get through all you need to get through, and to go ahead and proceed to be able to be making money in that time frame. Trading room, you can read about it there. You can visit on the page. And seminar program, if you're interested. There is a full home study program. I teach the classes live. There's also a home study program. I don't want to get into all that here, because you can find out more about that when you're interested. Homepage of DTS, join and be a free member. And sure, if you can help out there, maybe you can even give them, I didn't put it up here, but I can get it for you.
Yep, it's in the chat. The disciplinedtradingstrategies.com is on the chat, and so is the free stuff page.
Okay.
If everybody will scroll through that.
I just, for some reason, I just took down my, oh, there it is. Okay. Great. Very good, very good. Any questions? I have 3 whole minutes, which I can either devote to the next trader or answer anything you want. This is a quiet group, Sherry, not many questions.
Very quiet today. I have a feeling we're multitasking.
Yeah, trading day is underway. Well, it's a kind of pathetic trading day to do anything. But I always like, interaction. If you guys come visit me at DTS and attend the presentations there, because I'm a lot more interactive, like we're talking and chatting back and forth out here. I just kind of ran through the slides, which I feel is kind of boring. But that's the setup here, and that's what we do. So
it is the setup. Yep.
Yep. Thanks, guys. Sherry, I'll give you a couple of minutes to babble, but thanks everybody, and come visit me. Take care.
Thank you, Paul. I appreciate you being here again, and I appreciate it every time you do join us, and I'm looking forward to the next time as well.
Thank you.
All right, guys, last chance. Do you have any questions for Paul? You need to ask them now, or you're going to need to email him, or you're going to need to
they're done.
Go to his website. You should do all of the above. Let's see if I can do something here. I'm going to type this. I'm going to send that to all. So everybody's got your link to your website now. And okay. I really appreciate you being with us.
Thanks, Sherry. Take care, everybody. Good trading.
Have a great day. All right, folks. Take advantage of the free stuff page. It's chock full. I mean, just chock full. Let's see. I'm going to move myself back over here. Come on now. Clicking. All right. So that was Paul Lange with Disciplined Trading Strategies. I think that's a really good lesson for us all to learn, is to get back to the ordinary moves, like the basics, right? And I think that there was something there at the very end where he's talking about you need to know how to read the charts, right? And you can't make money unless it's a fluke if you don't know how to read the charts. So I know for a fact that he's got a lot of resources available for you. Now, next up is Marina Villatoro. Marina, the trader chick, Villatoro, and she's going to talk to us about understanding market trends and how to trade breakouts. She specializes in helping people day trade with confidence. She's been trading financial markets for years using trial and error to gain insight. And when Marina began trading E-mini futures over 8 years ago, she realized that no one was teaching the most important part of trading, which is basics, reading and understanding the market language. It speaks to us loud and clear, and being able to truly understand it will take your trading to whole new levels. And, you know, maybe you've been doing this for a long time. Maybe you just started, but in the end, a lot of times it's good for us to get back to the basics so that we, because the more you've been in it, the more you'll go back and you'll understand it even more. So, hi, Marina, good to see you. I'm going to make you the panelist,
Hello.
the presenter.
Hi.
How is it? Where in the world are you today?
Today I am actually in Spain.
Oh my. She's always somewhere new, you guys. So that
I
makes
know.
it even cooler than ever. Okay, so I just made you the organizer too, so that you can see the questions on the fly if you need to. And if you need me to post
Okay,
anything,
hang on
just let me know. Your microphone is gone, I think. Okay, it's back. Can I hear you?
Hello, hello.
There you are. Okay.
Okay, cool.
Your microphone was gone for a second there. All right, I'm going to be quiet and let you take it away.
Thank you so much. Hi, everybody. Okay, I am just organizing everything here. Hi, Bruce. All right, just a second. All right, great. So where are you guys coming in from today? I am right now traveling with my husband to Spain. What about you guys? Where are you? Are you traveling? Are you guys enjoying the beginning of the summer? Hi, Frank from Florida. Awesome. Which part of Florida? We actually go to Florida a lot. Bruce, you're from North Carolina. Nice. Where else are you guys coming in from? Orlando, Florida. Nice. I love Orlando. We've been there many, many times. And only one of those times was to actual Disney. There's so many more things to do in Orlando. It's amazing. So I am traveling right now with my husband in Spain. And the beautiful part about it, it is super sunny out right now. It is 8:30 p.m. and it is just gorgeous and sunny here. We're slowly falling in love with Spain. We're actually here because we are planning on moving here in January. So we're doing like a scouting trip of where we want to live and things like that. Manuel, you are from DC. My brother lives in DC. He actually just moved into a house in Bethesda, but he works in DC itself. Let's say you are working in Southern California. Where in Southern California? I used to live in San Diego. I love Southern California. I love California. California and New York are my two favorite states. Although I have to say I have a lot of favorite states. But I lived in California, so it's even more special for me in that respect. I just think it's such an amazing state. All right, guys, where else? Is anybody here internationally? Oh, Santa Monica, so pretty. The marina, the pier there, I love Santa Monica Pier. Is anybody here internationally or just from the US? Okay. Looks like just mainly from the US. Well, I'm going to get started. So I am so grateful you guys are here joining us today on these presentations. And even though I am going to be here teaching you and really hoping that you guys learn at least the one thing, I always say if you get that one thing, then you got something that you could really implement and take action. But to be honest with you, I also always say that day trading, investing is not a spectator sport. What does that mean? It means the more you jump in and actually do, the more you will get out. And that doing is asking me questions so that I can help you guys with questions and whatever you need, right? That's what I'm here for you guys to be able to learn something, but also for me to, I'm here live with you guys so that I can help you really learn something and to be able to apply it and put it to your own trading so that you can become better, okay? So what am I going to be learning, teaching you guys today? Hopefully you'll be able to implement 4 simple strategies to help you understand and utilize it for the breakout trade, because the breakout trade is literally one of the most powerful trades out there. So if you can apply anything to be able to spot it and take those trades, you will be that much better, okay? So who am I? I am Marina, the Trader Chick, and this is me right here. And what I will be covering today, more or less, is understanding market movements, because if you don't understand market movements, you're not going to be able to spot that breakout trade, right? And understanding how to use indicators for those best entries and profit targets, and to be able to identify the breakout trade. Okay, so before we move on, I want to do a quick official intro time. I am Marina, the Trader Chick. I actually am an expat. We right now live in Antigua, Guatemala. I've been living in Central America for over 20 years. So that's why we're here in Spain right now, so that we could, live in a new country, on a new continent. It's something, pretty cool that we enjoy doing. And before I became a day trader, I was a fitness instructor and a travel writer. I was one of the very first instructors to teach spinning and Pilates in Manhattan. If any of you guys do spinning or Pilates, you'll kind of understand how old I am. I've been around doing this for quite some time, and I'm a travel writer. I actually still have a travel site that I write on all the time, because for me, travel is not a luxury. It is a necessity. And we do travel about 2 to 3 months out of the year. And the beauty of day trading is that you can do it wherever. So it's part of that lifestyle that I really, really need. I am also trilingual. I was born in the Ukraine, in the Soviet Union. So Russian is my mother tongue. But because I was raised in the United States, English is my main language, right? But I've also been living in Central America now for over 20 years. We first lived in Costa Rica and now in Guatemala, so I am fluent in Spanish. And the main reason why I bring this up in the first place is not to be like, hey, how cool is being trilingual? It's when you learn a new language, especially in your older years. Like, I learned English when I was really young, so it came to me almost instantly. But Spanish I learned in my late 20s, and it was this process, right? You have to go through this process of translating and learning and all that other fun stuff. And when I began trading, I was really struggling for a couple of years until I realized that when you learn to read the market and the charts, it's a language. It's a language. And when you learn how to read it and even almost speak it, that's when you can really become an amazing trader. And that's what I want to show you guys today, because when you learn a new language, you cannot enter a conversation with 6 native speaking, let's say Spanish speakers. It's impossible, right? Because you need to start with the basics. You need to understand how to say hello. You need to understand how to say your name, and understand when the person responds. And it's the same with the market, right? A lot of people, what they do is they jump into a market that they don't have any idea, and they start to put their money into it without learning like the basics, without understanding how to say hello, my name is Marina. Instead, they jump in wanting to speak to these 6 native speakers who are having a pretty full-on conversation. It's impossible to keep up. And it's the same thing with the market, okay? And like I said, the coolest thing of all is that you can do this from anywhere. I have one computer, my laptop, and one chart. So I'm able to do this from anywhere, and I absolutely love it. Before before the pandemic, before COVID hit, I was actually doing quite a lot of online, in-person presentations as well. But after the pandemic, obviously, I had to stop doing that. And now I get to do it live, but in virtual time. So I get to also chat with a lot more people and present to a lot more people. And I could do it from anywhere in the world, as today I'm doing this from Spain. Okay, so what I want to do today is I want to focus on the 4 basic strategies of understanding what the market is telling us, right? Just like when you get in the car, this is super important. We forget about the car. We forget that when we first jumped into the car, we didn't just, go immediately on the highway at 60 miles an hour. We took it one tiny little step at a time. But before we even did that, we learned where the brakes were. We learned where the steering wheel was. We learned where the rear view mirror is. Because without understanding those basics, you're never going to be able to understand and learn how to drive the car. And it's the same with the market, right? Now, before I get started, I have the full presentation I'm going to be doing with you guys right now, completely for free, so that you could follow along with me. So this way you keep it and you'll be able to go back to that presentation and apply it and really implement it. So you got to go here right now, makingofadaytrader.com. Go to makingofadaytrader.com. I have the entire presentation there, so you can go and do it. It's completely free. I did this so that you guys could just really follow along. All right, now let's get moving. Getting back to the basics and building your trading foundation. This is the core of everything. Now, what is the basics of day trading? What is it? First and foremost, you cannot be a Formula One driver in a minivan, right? You need the proper vehicle to do just that, right? And what is that proper vehicle? It is your chart. It is your chart. You guys, you have to have a real charting platform. And today there are so many fantastic charting platforms that you could use, different indicators that you can trade right off of the interface, that you have your drawing tools. You need to do that. You cannot be scrolling on Robinhood. You need to have a real charting platform. And you need to have indicators. I personally use 2 indicators. I do know some people that do bare naked charts, but I believe that price action, when you couple it with even 1 or 2 really powerful indicators, can make such a huge difference. I use EMA lines and I use the MACDs because I believe that the MACDs, and after years of trading, the MACDs really is the least lagging indicator, and I love to use the MACDs. Again, everything I'm talking about, go to makingofadaytrader.com. You can get all of this entire presentation there, makingofadaytrader.com. All right, market movement and the breakdown of a trend. Look, we all know that there are 3 trends. We have the upward trend, we have the downward trend, and we logistically understand that there's a sideways trend. But the sideways trend is literally where the majority of the money gets lost, right? Why? Because this is not a place for you to be entering the market. This is that indecision zone. This is that chop. This is that exhaustion pattern, whatever you want to call it, the consolidation area, the channeling market. It's a place where the market really does not have any direction, right? And a lot of people end up losing the majority of their profits of the day, if not even more of their account during these sideways trends. The most important thing is to understand when they're happening and to avoid them. And when you recognize them, also, that's when the breakouts happen, when they break out of those areas. Okay, so here's what a trending markets look like, right? We have a downward trend, sideways trend, and then a breakout into an upward trend. What is an upward trend? Super simple explanation. It's when each pivot is higher than the other pivot, right? That's literally what it is. It is the bull market. It is when the market is trending up. It's when the market is going up. Okay, it is also when you are buying, when you are going along. What does that mean? It means you are entering at a lower price point, exiting at a higher price point, and you are taking that profit in between. All right, you are going along. You are buying. All right, now what is a downward trend? It's literally when each pivot is lower than the other pivot. And day traders, we make just as much money on the downward trend as we do as the upward trend. So you need to understand both trends. This is when you are selling, when you are shorting the market. What does that mean? It means you are entering at a higher price point, exiting at a lower price point, and you are taking the profit in between. It does not matter why it is happening, because technical analysis is the reason why we do what we do. Who cares if other people are losing? They don't care what you're doing. That is not for you to care about. It is a completely uncontrollable factor. What is controllable is that you enter at a higher price point, you could exit at a lower price point, and that's when you're taking that profit. Okay, you are shorting the market. Okay, it is the bear market. It is when the market is going down, it is trending down. Now, I personally am a scalper. That means that I go in for really short, small, quick entries. And what I love to do is go in for quick mini retracement trends. They're called immediate momentums. It is that correction trend, and I go in for that as well. So that is a really cool thing for you to be able to know, especially if you are scalping and going for the shorter time frames. Okay, so what are consolidation areas and transition areas? This is literally the trader's worst enemy, and learning how to spot them and to avoid them is going to save you so much money and make you a lot of money. Why? Because that's when we could spot those breakouts. So what is a consolidation market? It is the channel. It is when your pivots, as the market is literally going in between two areas, and we're going to really dive into those two areas because they are the most important thing of all. Excuse me, let me just get some water here. Okay. So why is this the area where the majority of our money gets lost? Pretty simple. Trading is an emotional activity. We all know that, right? So there are two types of traders. The one kind of trader is the trend is your friend kind of a trader. And when they start to spot consolidation area with the market been trending in one direction, they start to tell themselves an emotional story. Oh, the market has been going up all day. It's going to continue. I'm going to continue going long. Or you have the contrarian trader, and they start to tell themselves an emotional story. You know what? The market's been going up all day. It's got to correct. I'm going to short the market. Here's the reality, guys. The market doesn't have to do any of that. The market is going to do what it's going to do. So when it's consolidating, when it's in that indecision time, what do you do as the trader? You sit out, because this is a very definitive area of you knowing that the market has absolutely no direction. So if you are entering the market, you're doing it late because you are being hasty and impulsive and you want to beat the market or predict it, and you'll never win like that. What you do is you read the market, and the market is screaming, sit out. Let me decide what I'm going to do. And once I decide, that's when you can enter. Okay, that's when you enter. So it's a consolidation, it's a slowdown, it's a complete weakness of the market. Do you really want to be in a market that is super weak? No. Why would you want to risk your hard-earned money on that, right? And you could have mini consolidations. Like I said earlier, I'm a scalper. So for me, these mini consolidations, they could really make or break a trade for me. So I sit out even when I notice these tiny little consolidations. And these consolidations happen all the time. You could have a consolidation, a breakout, another consolidation, another breakout. So you could actually do quite a lot of fantastic trades, but you need to know what you're looking for. Okay, sideways markets, they take your money. Stay away. Now, how do we spot these sideways markets? How do we understand them? So here's the thing. The market, it respects areas, and we need to respect those areas. What are those areas? Support and resistance. What are support and resistance? I'm going to tell it to you straight. They are your safety areas. Here's the thing, okay? Formula One drivers, during racing season, they know 100% that 25% of them will either be in an accident or, even worse, a fatality. So when they enter their car, do you think they're just going to jump in and
and go? No, with those odds, they're scared to death because it's scary. So what do? They have their helmets on. They have their fireproof uniforms on. They get in and they put on their seatbelt. Resistance and support areas are our seatbelts. These protect us because when we have these drawn in and identified, then we are protecting ourselves. And you cannot just have a mental resistance or a mental support. It's like putting on a mental seatbelt. It's ludicrous. You know, it's those stupid mental socks that people pretend to have. They don't work, right? So we need to understand and we need to draw them in. So what is a resistance area? What's a resistance area? It is the ceiling of the market. It is where the market is hitting 3 or 4 or more times over and over again. It is an area which is revisited, and we need to draw these areas in. We need to have these areas drawn in and protected ourselves. And what does that mean when you protect yourself with them? You don't enter. Or if you're already in a trade and you're noticing this area, you get out right when it's hitting it. We don't care if it continues a million more points. The point is you want to protect yourself because it's about the odds, right? And the odd of it hitting that area is much higher than it breaking it through until it gives you that confirmation. What is a support area? It is the floor of the market. It is when the market is hitting over and over again and is stopping a downward trend. Is it going to change trends? We don't know that. It can continue on and break through, or it can change, but that is not for you to decide. What you need to know is that it is a support area. You need to draw it in and you need to sit and wait out until it is breaking through or completely changing the trend. This is when you recognize those channeling areas. Do you really want to be in a market that's this ugly? This is what is called an ugly area, right? I mean, really, there is absolutely no direction. Why do you want to put in your hard-earned money into this? This is where it's bouncing back and forth. Look at this ugly channeling market. Look at that erratic movement. Choppy behavior. Why do people think that they can outsmart the market by going in and thinking that they can predict it or beat it? It will never happen, guys. Yet the only thing you can do and show the market that you do know what you're doing is stay out and wait until it confirms when it's going to move out of these areas. Now, how do we spot these areas in the very beginning, right? Like once we have those areas, okay, but how do we even start to spot them? Because it's okay when you first get in, because at the beginning you don't know if it's an area, but when you start to recognize those areas, that's when you need to stay out. And how do we recognize them? Through reversal areas and divergences. What are reversal patterns? Double tops, triple tops, double bottoms, triple bottoms, head and shoulders. Okay, this is so it's really important to also remember reversal patterns are not indications that it's gonna reverse. What it is a very high probability, but you don't know that. What you do know is that the market is slowing down and it is the beginning of the support or resistance areas, and it can definitely reverse, but you don't know that, and you don't want to be outsmarting the market because the market will always outsmart you back. Divergence. What is divergence? I live for divergence. I absolutely love divergence. So as you can see here, my price action is going up and my MACDs are showing me that it's heading down. What does that mean? It means that the market is losing strength. Do I want to be putting my money into a weakening market? Definitely not. And that's exactly what's happening there. Now, when I have a reversal pattern and divergence, that is even more confirmation for me to fully stay out and wait until it tells me exactly what to do. Again, is it telling me that it's going to reverse? No, it is definitely saying that it's a high probability you can reverse, but it is not telling me it's going to reverse, but it is telling me to stay out. So when I spot these areas, I totally stay out. Okay, divergence is king for me. It is the absolute king. Now, I want to put all of this together. Remember, everything that I just went through is right here for free in makingofadaytrader.com. It's in the presentation for you right there. Makingofadaytrader.com. Go and get your cheat sheet. Now, let's talk about those breaking out areas. What are breaking out areas? So we need to have our
areas of support and resistance drawn in. If you don't have them drawn in, you'll miss the breakout. What is the breakout? So in layman's terms, it's really quite simple. Okay, so imagine you are living right here, right? You're living super south, and your best friend or your sibling calls you up and they're like, hey, I'm having an impromptu party. Come on over. You have been to their house a gazillion times. You could do it with your eyes closed. You hop in your car, you get on the highway that you know so well, you're driving. But all of a sudden, there's a construction and a huge detour, and you have to get off the highway. I don't know about you guys, but I start to totally freak out. Why? Because I don't know where I'm going, right? The detours could stop. They could stop showing the signs. Google and Waze has not caught up with it and keeps on sending me back to this highway that is closed. What's going on there? I am in indecision zone. I am stressed out. I'm not sure where I'm going. I'm in that collapse zone. And all of a sudden, the construction worker opens up the road and says, okay, you can get back on the highway. And that's when I'm back on the highway that I know, and I am full of confidence. That's that breakout. You do not want to be in the detour zone, okay? Stay out of that detour. You want to make sure that you're back on that highway when it's full on and you have that confidence. That's the breakout trade, okay? So here is how I do my trades, and this is how I use my indicators with the trading. So first and foremost, most important thing of all, I have my support or resistance drawn in. In this case, it's a resistance. By the way, guys, drawing tools are on pretty much any charting software, and they are free. Good charting softwares, you do not need to buy indicators. You do not need to buy just flashy indicators because you get great universal indicators. So I use the EMA lines and going through here, right? This is my MACDs. As you can see here, the MACDs, this dashed line, that is the 0 line. That is where it's showing me full on weakness. But all of a sudden it breaks through, and it totally breaks through right here. And I use my EMA lines from where I tell the market I want to enter. I never enter with a market entry. I always have a limit order, right? I'm telling the market where I want to go. So imagine archers, right? Have you guys ever seen an archer? They don't walk around aimlessly on a field. They have a very specific space where they take their shots from to hit the bullseye. Day traders, we need to do the same. We need to tell the market exactly where you enter, and that's how I use my EMA lines. Now, another really quick bonus is when I have my areas drawn in and I have these channeling markets and it breaks out to a new trend, I want to enter, and that's how I also do it. So it's technically a breakout, but the opposite direction in a completely new trend. Okay, so remember everything that I just went through, makingofadaytrader.com. I just want to do a really quick live analysis here and just show you how I use the market. So today the market was pretty crappy, and today was FOMC. So in the beginning of the day, it was pretty much just grinding, right? So I always have my areas completely drawn in, right? Until it finally breaks through. And look at this. This is FOMC, right? And basically, once that FOMC came out, it was still quite indecisive. It did a little bit of an erratic move. But look at this. Look at these channels until it finally broke through. And as you can see, there was obviously positive news with the FOMC because it started to go back up, right? I mean, we've had a pretty crappy summer beginning so far, right? With inflation, the euro crashing, all these other things going on. So as you can see here, when I have these drawn out, I know what the movement is going to be once it breaks out, and I'm able to use that properly. Okay, so this is how I use my charts and my indicators. And like I was saying earlier, I only use 2 indicators. I use my EMAs, and here I can show you I use my EMA lines and my MACDs. Oh, hang on, there we go. So here we have, I use 52 period, I use the 20 period, and the 135 period. And I use a tick counter because I personally use tick rather than a time frame. So what is a tick? As you can see right here, each candlestick, I use 610 tick charts. So I see what is happening in live time, in the moment. Okay, and that means 610 transactions in real time, and that allows me to eliminate the volume indicator, which is one of the most notoriously lagging indicators out there. So as you can see here, that's exactly what I'm doing. I have the real-time volatility going on for me right away, and this is how I use my charts. Okay, so if you guys have more time, if you have questions about my charts, definitely let me know. Okay, can you guys hear me? I just got a notice saying that I'm experiencing a network connection.
I can hear you
No, it's all good.
perfect.
All right, guys.
Yeah.
So as you know, as you realize, okay, you can hear me, great. So here's the thing, guys. We have everything we need to take action, right? We have these amazing presentations and summits that you guys get all the time. You guys have access to YouTube. You have access to amazing books. But the real thing is, how do you know that you are doing it right? How do you know if you're doing it right? How do you know what you are taking from all these different presentations and YouTubers and putting it together? How do you know if you're doing it right? All of this is great, but the real question is, and a lot of you guys are asking yourself, is like, how do I really get started? And this isn't from beginners only, right? I get these questions from seasoned traders who have been trading for ages and are still inconsistent and losing money. I'm constantly asked, what can I do to turn this around to be profitable consistently? And a lot of times I realize that it's literally just lacking the basics, lacking those little things, and they could truly, truly make all the difference. And when I say the basics, another way for you to understand is a lot of times we're putting in windows. You know, if you're at a construction site, you're putting in windows before you're building those walls. And then the windows are constantly crashing, right? But when you put in those walls, that foundation, that's when you can really, really make all the difference. It's like with a car, right? Like I mentioned earlier. A lot of us forget that when we first enter the car, we have to learn, you know, where's the steering wheel? How do I use the steering wheel? How about the gears, shifting those gears? Where is the clutch? Where is the brake? Where is the accelerator? These are all basics that you have to understand, because if you don't understand how to put on the clutch while you're shifting gears, you're not going to be able to shift that gear. How to brake when you need to, when you're seeing a car that's cutting you off, or how to accelerate. All of these things are the basics. And most importantly of all, like I said before, the safety. If you've never been in a car and somebody's telling you, you know what, once you get in that car, you need to put on that seatbelt because it's going to save your life. But if you've never been in a car, you don't know what a seatbelt looks like, you're freaking out. You're like, oh my goodness, what is it that's going to keep me safe? These are the basics, right? This is what is the most important thing of all. And my own sad truth is that I've spent over $20,000 on my own trainings. And a lot of times I was never taught the basics. I was struggling and struggling. And I literally lost over $4,000 in 5 minutes, because every time I was asking questions about the basics, you know, where's the reversal pattern? I'm not understanding divergence. I was treated like I was supposed to be born with this information, or completely ignored all the way. And then what happened is I quit. I ended up quitting. But here's the thing, guys, and I guarantee that the majority of you are sitting here and are probably understanding this, that we are bit by the trading bug. And the thing with that is it never stops itching. Why? Because deep down inside, we know that we can do this. We can do this. So I came back. I decided to come back and get back to the basics. And I just started just working my charts and understanding the basics. And as I started to understand the basics and developing that strategy, I started to teach it to people, simply talking about it. And one student of mine says to me, he's like, you know, you have a very similar strategy and teaching method to John Wooden. I'm like, who's John Wooden? And he was like, he's the coach. He's a coach. So check him out. And when I started to learn more about Coach John Wooden, I realized this man is a legend. And his entire philosophy is when in doubt, get back to the basics. This guy was a legendary coach for basketball. He won over 88 nationals and over 10 NCAA competitions. I mean, this guy worked with superstars, superstar basketball players. But every time they started a new season, he would start with the basics. He would go back to how to roll up your socks, how to tie your shoes, how to dribble that ball. Why? Because it doesn't matter how much you know, and these guys do know how to play basketball, but if they forget how to tie that shoe and it falls off and they get a sprained ankle and they're sitting out the whole season, it doesn't matter what they know, right? And that's exactly what it's all about. And for you guys, whoever is here today, right now, only for the live participants only, I have a very special offer. My introductory course, which I created just for that. It is boot camp for day trading, and you guys could do this on any apparatus. You could do it on tablets, desktops, laptops, even your iPhones and Androids. And all of this, the entire introductory course, one-time payment, one time. This is not a recurring payment, $97. And you can go here for bootcampfordaytrading.com. Now, $97. Here's the thing, guys. What can you really get for $97 that's going to bring you that same return on investment? What is that going to bring you, right? You're going to go golfing for a day. Today is probably for only one person, $97. Maybe we'll get you in there. You can't even enjoy it with your friends. And I don't know about you guys, but $97 cannot even buy a lunch for two people anymore. $97. So let me break this down for you. What you guys are going to be getting here. Okay, so first of all, you're going to be getting a simplified day trading package. Also, the other thing that I notice the most with my students is a lot of people are having a lot of difficulty setting up their platforms. I have the full platform set up for you guys, all done so that you guys are ready to start trading and not wasting any more time trying to set up your platform. I help you with that 100%. Okay, then dissecting markets, understanding those uptrends, the sideways trends, and downward trends, because these are super important. And the magic telltale signs, those reversal patterns and those divergences. We really dive deep into understanding them, spotting them, and learning how to implement them. And we talk about support resistance areas. Those divergences, guys, they are the key, right? And it's also telling you when those reversal patterns are working, when those support and resistance areas are starting to form, so that you could stay out. That alone will save you thousands, seriously though. And spotting those breakouts, because if you don't have those areas drawn in and identified, you're going to miss out on the most powerful trade of all. And how to avoid those fake out breakouts, because they happen. They pop out and then they go back out in, and you lose money, but you could avoid that entirely. And I teach you all of this. Okay, this is all part of this course, and you get unlimited access to the curriculum. All of this is valued at $1,600. You get all of this for the $1,600 and included. And most important of all is my students, and I have students from all over the world, because trading is the cool thing is you can do it from all over the world. So Michelle says, best money ever spent. More than once I didn't understand what I was doing and I had it all wrong, but with the feedback I got it and it all clicks completely. You are the only mentor that actually checks the work, and that is so amazing. Thank you for all that you do. I'm so enjoying the boot camp. I'm learning every single day. But here's something important. Remember I asked you, how do you know you're doing it right? Look, without accountability, without mentorship and one-on-one, it's really hard. So I am going to do is give a bonus, one entire month of unlimited one-on-one mentorship work with me. 100% feedback, one-on-one working together, because that mentorship, that is what's going to bring you to the top. And on top of that, I have one extra bonus. This is all included in that $97. I run a live trade chat room. I am the only moderator there. I do not hire people. A lot of times they're just hired hands who don't even know how to trade. It's me. I have a live trade chat room weekly, and I am including 1 month, 30-day free membership in this special bonus. All right, guys. All of this is valued at $2,600, but you get it for $97. So go here right now, bootcampfordaytrading.com. Bootcampfordaytrading.com. This is really a no-brainer, guys. Here's what you get for that $97. Everything that's included in the course. 30 days one-on-one mentorship with me, live coaching, feedback, not unlimited, 1 month. Then you also get 30 days live chat room membership in my live chat room, where we go into the chat, we go into the live market, we take live trades, we implement everything there. Bootcampfordaytrading.com. But here's the reality. Here's the real thing, guys. All of this, $97, is less than one trade. You know that, and I know that. It's less than the price of the one trade, right? How much do we normally put in for a trade? Way more than that. And you get all this education. The cost of this course alone that comes with it will bring you 10 times a return on your investment, so that you could go out and do 100 of these dinners and lunches with your friends from that education. But here's the thing, guys. Because of my one-on-one mentorship that I give, commitment to my students, I can only take 25 students. I can only take 25 people. So go here right now, bootcampfordaytrading.com, bootcampfordaytrading.com. And look at this. When you go here, this is the order form that you're going to see. You could pay $97, or you can even get started with $59. This is a no-brainer, guys. Bootcampfordaytrading.com. Go here right now, and I am happy to answer all your questions right now as well. Okay, Jason, why do you use 610 ticks? It's not arbitrary. It is something that I've been working on for over 10 years. Arbitrary is when I something just pick out a hat and go, okay, I'm going to do this. I have implemented this for years. Everything you're going to do, Jason, in the beginning is arbitrary until you actually put the work in and see how you get a really strong strategy to work with that, right? So that's exactly what it is. I always use 610 for pretty much anything. Why? Because I like the 610 transactions. You could apply it to anything, Vesta. It's not only for the e-minis. Yes, I prefer the e-minis, but I have many students that work on all different, they use NASDAQ, Russell, or stocks, Tesla, Microsoft, Apple. So it's for anything pretty much. You could definitely apply it to. If your charting platform doesn't have the 610 tick charts, it's okay. You could apply it to 1 minute to 3 minutes as well. It's very similar in that respect. Okay, guys, so let me know if there's any other questions, and you can go right here, bootcampfordaytrading.com. Honestly, $97 is less than one trade that we normally take. All right, so let me know if there's any other questions, guys, and we can go here, bootcampfordaytrading.com, bootcampfordaytrading.com. It will take you to the order form. Hang on 1 second here. This is where it takes you right here, $97, or you can start with $59. You get access to all of this right away. All right, bootcampfordaytrading.com. And I just want to say thank you, everybody, so much for being here and taking the time to spend this time with me and with us here. And thank you so much, Sherry, for having me again. And I really appreciate it.
Thank you.
So
I know
much.
it's late there, isn't it? It's after, wait a minute, is Spain 7 hours ahead of me?
It's,
Is it 10
I don't know where
o'clock
you're
there?
at, but it's 9:15 here right now.
Okay, I'm in Eastern time in America. I'm actually in Canada, but I'm on the eastern side of the
Okay, so 6 hours.
North America.
Yes.
Well, that was awesome, guys. I put the links in the chat. And Marina, do you want them to have your email or just go to this form or go to, what's the email address if they have questions?
So it's thetraderchick@gmail.com.
All right,
The
putting that in the
traderchick.
chat too. There you go.
Yeah, there
Everybody
you go.
see that?
Mm-hmm.
Good deal. And you answered Vesta's question about, do you mostly trade ES?
I trade different ones, but yeah, ES is definitely my favorite one. It's the most fluid for sure. So that's my
Awesome.
favorite one.
All right, guys. Has anybody else got a question? This has really gone smooth today. Everybody's ahead of time, on time, and done early. 1 whole minute. That's a lot.
Yeah, it is.
Well, have a wonderful
Thank you.
evening. Thank you so much. I can't wait to see you again soon. And take care and enjoy your time in Spain.
Thank you so much. Bye. Bye,
Bye
everybody.
now. All right. Well, what do you think about that, folks? Let me just see if I can change to me, show the screen. That was Marina Villatoro of the Trader Chick. Yeah, you should go and check it out, people. That is an unbelievable offer that she's making you, and I know that you will find it to be super valuable. So our next person coming up is Andrew Keene of OptionHacker. He's going to talk to us about following smart money with unusual options. He is the president and CEO of OptionHacker as well as Alpha Shark Trading. And he originally founded as KeeneOnTheMarket.com in 2011. And previously, Andrew worked as a proprietary trader at the Chicago Board Options Exchange, CBOE, I should have said that. He began his career in the prestigious Bota Capital. They have a clerk to trade program, and he would eventually co-found the KATL group. Andrew currently actively trades futures, equity options, currency pairs, and commodities. He's a regular guest market commentator on such networks as Bloomberg TV, CNN, being here with us, and Fox Business. And I just really appreciate you being replace. Now, Andrew, do you like to answer questions on the fly, or do you like them held until the end?
No, I can do them on the fly. I can do them on the fly.
All right, there we go. This way you can get some interactivity. Thank you for joining.
Everybody doing today? This is actually, to be completely honest, this is a rarity for me to do a webinar. I have done over 1,000 live webinars, but lately in the last like 4 years, I decided I'm not going to do them. But here I am. So this is my first one, I think, this year. So like I said, my name is Andrew Keene. I'm a full-time trader and educator. This is an example of institutional order flow. So the way that I trade is completely different than anybody else in the world. I don't look at charts. I don't look at any moving averages. I don't look at fundamentals. I just look at order flow. They always say stocks can't lie, but people can't lie. People lie and stocks can't lie. Okay. So all I care about is the biggest and best traders in the world are placing and allocating their capital on, and then I just follow them. So this is an example of institutional order flow. We saw it in DKS. They bought calls for 75 cents, $75 per one lot. You could have got in there, went up to $4, 600% profit. So like I said, my name is Andrew Keene. I like to consider myself one of the top option traders in the world. So if you trade futures, if you trade Forex, this is not your presentation. If you day trade stock, if you swing trade stock, it's not your presentation. If you're an option person, that's what I'm here for. So if you like to trade options, give me a hell yeah in that box. I had made millions of dollars in my career. Sometimes it's weird for me to say that I'm a multimillionaire, but I'm a multimillionaire not from a trust fund, not from a business my dad gave me, but self-made trading options. I've taught over 1 million students how to trade throughout my history. Like I said, I've done over 1,000 live webinars. I haven't done one this year, so it's kind of weird, but it's good to be back. Regular contributor. I used to be on CNBC, Bloomberg, Fox Business, Sky Australia, WCIU, BNN Canada, The Street, Forbes, I don't know, Benzanga, you name it, I've probably been on. Before we go through, we have to go through the disclaimer. Day trading. Short-term trading, option trading, future traders are extremely risky undertaking. They're generally not appropriate for some little capital, no tolerance of risk. Basically, I'm not a registered investment advisor. So I cannot give you recommendations or advice. I can do is offer you my opinion, which I think is much more valuable, but I cannot give you recommendations. This is called the proof is in the pudding slide. It's kind of hard to see here, but you see here at Goldman Sachs, that is my clearing firm. Then you see my name, Andrew Keene. Then you see the dates. I think this was 08. So this is the end of the year 08, 12/31, 2008. And then you can see my profitability here on the bottom, $3.4 million. So I made that year before CLE's payment for order flow, commissions, I made $3.4 million trading the way I am teaching you guys today. You can get into most of my trades for less than $100. It is known as institutional order flow in the option market. In March 2003, almost 16 years ago, I started trading using a strategy I'm teaching you today. The strategy is designed to beat the hedge funds using what I call unusual option activity, institutional order flow in the option market. After trading the strategy for over 19 years, there have been consistent patterns that result in profitability. The real breakthrough came when we noticed how to better our exit strategies. OptionHacker is a proprietary-based scanner that shows institutional order flow in the option market. I don't care how many widgets Apple sells. I don't care what the chart looks like. All I care about is that the smartest people in the world are putting money into these trades. And they're better off putting money into options instead of stock. These options is a derivative and it can give you a better return on investment. So we have created the only unusual option activity scanner for the retail trader. Here's one today. These went up about 25%. So some trader somewhere in the world, we don't know their stock or option position, bought 3,414 canoe, 6 calls for 80 cents. Those went up to $1.20, maybe $1.10. Let me see exactly. Oh, let's see, canoe calls. AUG 6s traded up to, put the high in here. They traded up to 115. So they traded up to 115 today. So that is an example of institutional order flow. We have a scanner that will spit out somewhere between 2 to 10 signals a day. They put $1 million bet on Snap. I don't even care about anything else. I don't care if there's an activist in Snap. All I know is somebody out there put $1 million in Snap. Do you think that traders trade on insider information? I'm not going to give you the answer for that, but just think about it for yourself. Here's an example, JP Morgan, JPM, buyer, January 8th, 2022, 128 calls for 99 cents or $99 per one lot. When option hackers trigger at the usual option activity, the stock often makes a significant move. When JP Morgan experienced bullish unusual option activity, the JP Morgan January 8th, 128 calls increased 900%. We just looked at that trade. You can get into that trade for less than $100 per one lot. Great thing about trading options is you can get in most of my trades for less than $100. Okay, and they have the potential to make 100%, 200%, 300% windfalls in the course of days, if not hours. And that's why I like trading this way. Stocks are boring. They move 3 to 5% in a day. An option can potentially move 200%, 300%, 400% profit in a day. The JP Morgan calls that we showed you, increased by 900%. $250 invested in the signal turned into, actually that math's wrong, it's $2,000. $1,000 invested in that signal turned into $9,000 here in JP Morgan. When the unusual option activity appears, stocks often big move, and the option jumps in value, because options can make big profits when stocks experience big moves. And right now we are seeing huge moves in the market. I mean, the S&P rallied. There was down 70 points yesterday. It rallied back all the way to unchanged yesterday. Today, futures were down 15. Now they're up 30, right? When we are seeing big moves in the market, this is the perfect time to trade using the strategy I'm teaching you today. Buying call and put options is the perfect way to catch in when stocks are making big moves. Based off the 2 golden rules, we name this unusual option activity. I'm sure you'll see it a lot in the press, how somebody buys a bunch of call options the day before a merger and acquisition. Our scanners have picked up this kind of movement before in the past. There was a TACO, T-A-C-O, Del Taco, calls being bought before the takeover. Unusual option activity not only forecasts direction, but also predicts when a big movement in the stock is likely to happen. And big price moves are what make options explode in value. Pairing the 2 golden rules and unusual option activity for trading power. This is what I learned from the biggest hedge fund traders in the world. So we'll rewind a little bit, talk about me on the trading floor. I graduated college in 2001. My pedigree, my knowledge is trading, okay? All I've done since I graduated college is trade and educate, trade and educate, trade and educate. I haven't done anything else really. I never had a corporate job. I mean, I had one for like 6 months. I haven't done anything else for 20 years. And I just continue to teach you guys the exact same strategy and philosophy that I've taught so many students before. We don't care about anything else in the world. You can go on Seeking Alpha right now. There's 200 articles why the market's going to crash. There's 200 articles why the market's going to go through all-time highs. 50 articles why Tesla's going down. 50 articles why Tesla's going up. None of that matters to me. All I care about is the smartest traders in the world, the Warren Buffetts, the David Einhorns, the Carl Icahn, the Ian Cooperman. Are they getting long or short? That's literally all I care about. Are they getting long or short? That is it. In the early 2003, a trading firm known as BOTA Capital Management, BOTTA, stood for Best Option Traders There Are, taught me this highly secretive trading strategy. This training was so important that if I left the trading firm and went to work for another one, they're going to sue me for $150,000. Crazy. Like, I literally had to sign a contract that said, hey, teach me everything you know, and if I leave, then you can sue me for $150,000. And I signed it. I was comfortable with that. Why? Because I wanted to make a name. This was my time to make a name. So I did everything in my power possible to basically try to become the best trader there was. And then I turned that career into making millions of dollars, becoming a multi-millionaire before the age of 30. I could retire right now, be very easy to go off to like Thailand or, I don't know, Bali or Fiji. But I think it's my goal to basically teach and educate everybody in the world what I've learned and what has made me so much money learning. Every single day I study over and over and over in order to make millions of dollars in the market. I mean, looking back, it's so weird for me to think that I've made millions trading. It really is. but I have. And that's, something I should be really, really proud of. This trading became what we call today as unusual option activity. Institutional order flow in the option market, okay? Unusual option activity. If Apple trades 20 million shares in a day and it traded 100 million shares that day, that'd be 5 times usual volume. Options are the same way. If an option trades 1,000 options in a day, then it trades 5,000 one day, that'd be 5 times usual volume. So that'd be 5,000 options on a normal volume of 1,000. That'd be 5.0 times usual volume. If it's not usual, remember, it's unusual volume. What this firm discovered turned dozens of graduating college kids like myself into millionaires. Okay, and it's so weird to say. Let's go to Thailand. I've been to Thailand. I taught English in a Buddhist monastery. If the market keeps going down like this, I have a lot of money personally invested in the market. If the market keeps going down like this, maybe I will. But what was really intriguing was combining the golden rule often produced maximum returns. And that's what we're looking for. Maximum return in the option market. The accuracy of these patterns with unusual option activity increase the probability of highly explosive trade setups. And today, OptionHacker follows the same exact rules I was taught by this trading firm 18, almost 19 years ago. When 2 bullish rules lined up for Dana Incorporated, the stock took off to the upside. Here's exact signal that we saw in Dana. Trader buys, never know their stock or option position. 2,315 DAN, February 19th, 2022, 20 calls for 125. So this is unusual option activity in DAN. Let's say Carl Icahn knew who Andrew Keene was, and Carl Icahn does not know who Andrew Keene was. And he texted me. He's like, AK, I'm going to go buy $300,000 worth of Dana calls. I don't even know what the company does. Right now, I think they're like, they do like materials. I don't even really know what they do. I think they do materials. I'm going to buy $300,000 worth of calls. Do you want a piece of my action? I would say, of course I want a piece of your action. You're Carl Icahn. He doesn't know who I am, so he doesn't do that to me. But if I did, I could follow him in. And with our proprietary-based scanner, you can now follow in the biggest and smartest traders in the world in their option position. This trade was a little bit more expensive. It would have cost you about $125 to get it. The DAN, February 19th, 2022, 20 calls, increased 250%. $100 turned into $350. That math is wrong. $1,000 turned into $3,500. The 2 patterns behind these trades, and the only pattern that really matters, so the 2 patterns that we observe behind this trade that make up many of our big winners are the following. Condition number 1, surging buyers in the option market. Okay, I watch CNBC for entertainment value only, but there's nothing I would ever say like someone goes on TV. I won't say the guy's name, but one of the persons told you to buy Cliff at 27. It's down in half. It's his biggest position. Now they just won't talk about it anymore. His biggest position was Cliff at 27. Now it's 13. They don't ask him about it anymore. I wonder how that works. So surging buyers in the option market. We're looking for stocks that have an asset criteria of unusual option activity to the upside or to the downside. So this can be bullish or this can be bearish. Unusual option activity must be present in the option market as an original hint that the trade is setting up. Okay, so we don't randomly take trades anymore, guys. We must see that call buyer in the option market if we want to get long. We do not try to predict when unusual option activity will hit. It can hit anytime throughout the day. Usually it hits it within the first hour of the day. But throughout the course of the day, it can hit at any point throughout the course of the day. We then discovered that the charts line up to make an average trader thousands, if not hundreds of thousands of dollars. I've had people that told me they bought, was he buying Aston Martin DB9? Aston Martin DB9, okay? We never got, confirmation, but that's what people have told me. People have told me they made hundreds of thousands of dollars from the strategy. Therefore, OptionHacker ignores any news. It only focuses on the biggest orders from the biggest traders in the world. Here's a perfect example of what we saw hit our scanner. OptionHacker signal, trader buys 1,093, BABA, January 22nd, 2021, 245 calls for $1.85. Someone came in here, said, I want to place a big bet in BABA. Obviously, BABA has gone down in value since then. So what happened? Number two, if you want to use technical analysis, you can. We look for short-term bottoms or tops by multiple candles. So if you're a big technical analysis person, I am not a technical analysis person, you can combine the volume greater than open interest with technical analysis. Then we look for a well-defined, predictable pattern on unusual option activity in the market. So we gave a signal today in Canoe because, we've traded Canoe before and it's made money. Look at the market go up today. Wow. Forward futures up 40. We found that unusual option activity often supercharges the chart for optimal trading. The charts define the price action for that trade. The reversal or continuation pattern must be present in order for us to make a trade. Condition number two, consolidation to the upside or to the downside. When all bullish market conditions line up, we look to buy call options. That simple, that straightforward, that easy. Here's an example of Alcoa. Someone buys 15,000 AA Alcoa AUG 24 calls for 55 cents. So someone said, I want the right but not obligation to control 1.5 million shares of Alcoa. 1.5 million shares of Alcoa and that right, they paid $750,000. The minute I saw that signal, and I saw that hit our scanner, I said, I need to get in this trade. I'm going to get into this trade. So what I do, I bought the exact same call option that they bought. Alcoa, see how much money I made. Real money, my own money, real time. I made $3,500 on this trade, guys. I made $3,500 on this trade. Simple, it's easy, it's concrete. All you have to do is follow the smart money in. When Electronic Arts had what we call the golden rule, we knew Electronic Arts was going to take off to the upside. Here's EA. You can see my P&L here in EA. How much money did I make? $3,000 profit. My own money, real time. So that was a signal here in EA. The EA, August 24th, 134 call option, increase 200%. $200, $250 turned into $750, $1,000 turned into $3,000. Unusual option activity essentials. If big moves in stocks can make big money trading options, and if our risk is always limited to the price that we pay for the option, we can never lose than what we pay for the price of the option. Then it's possible that unusual option activity might be the absolute ultimate way to trade options that we've ever seen before. In fact, this breakthrough could be the best way to trade options that we have ever seen before. And the best part is that the unusual option activity is simple and easy to trade. You see the tell, you take it, you put in your stop loss, and then you put in your profit targets. It is literally that simple and that easy that anybody can trade the way that I've told you guys today. Now, it's important to understand that there will be losing trades, believe it or not. Wait, AK, not every trade is going to make money? No, not every trade is going to make money. Nobody has a trading strategy or philosophy that works 100% of the time. Oh, I just said that slide. But it's okay to see 50% losers when we're finding huge monster winners. 100% profit, 200% profit, 300% profit, 700% profit. That's what our strategy goes. Limit the losers and go big for the winners. So we also have a course that teaches you how to trade this strategy. I have sold over 10,000 educational courses at Alpha Shark. Everybody says, and this is why I stick to the one that I know best, unusual option activity. Okay. So out of the 10,000 educational courses we have sold, this is the creme de la creme. This is the best course that you could get. This is our #1 selling course. God, I know these slides so well. I've done so many. This strategy is so easy. My father, who's actually now 73 years old, is born in 49, trades some of the signals. He combines this with his own method and madness. And he takes some of the trades. He doesn't take all the trades, but he takes some of the trades and trades with his money in his retirement account. And best of all, we will target unusual option activity trades like these. I made $31,000 in C&Q. Remember, past performance is not indicative of future results, and I'm also not a registered investment advisor. The C&Q September 36 call option increased 400% in value. $100, turned into $500. $1,000 turned into $5,000. Some of these math is off. Here you can see the C&Q call option went from 40 cents to $2.80. Wait, Bitcoin to 7,000. Melco, October 23 call option increased 300%. $1,000 invested in the signal. Said just $1,000 turned into $4,000. Maybe you're a smaller trader, $100 invested in the signal turned into $4,000. You can see right there, the call option increase in price of value. The FEYE call option not only made me personally $8,000. So not only did it not make me $8,000, it's also mentioned on CNBC hours later. Wow, what a signal. You can see here in FEYE, this one I said I made $7,000, real money, my own money. You know, when there's so many of these like webinars out there, there's so many educators out there. You know, I always say like 3 things. How long have you been trading for? How often you trade? And can I see some real statements from a broker? I wouldn't trust an Excel spreadsheet. I would say, hey, can I actually see a statement from a brokerage that you actually made money? Okay. How long have you been trading for? Can I please know how much minimum stock control to do before I trade? So every single option, we don't look at it unless it's 1,000 contracts. 1,000 controls 100,000 shares of stock. Okay. And the cool thing about this one, I was literally on a bus headed to the Hamptons. And I'm sure you all know where the Hamptons is. I'll be there for 3 weeks of summer. It's where all the rich hedge fund managers go. I'm on a bus literally headed to the Hamptons. Guess what? It's mentioned on CNBC after the fact. Okay. After the fact is mentioned on CNBC. Here you see it, one of the Nigerians. You see, buying calls at FEY. Thanks for talking about that. 4 hours after it hit our proprietary base scanner. Right there. They had a deal with Microsoft. I was on a bus headed to the Hamptons. So I'm literally on a bus headed to the Hamptons when they talked about it on CNBC. I made $8,000 on a $29 bus ride. Thanks for playing. We also want you to master unusual option activity. That's a long question. Hopefully I can get to. You'll get my new master course, options, top to bottom course. In the usual option activity master course, I'll walk you through soup to nuts, show you examples in clear time and live. So this is everything you're going to get, guys. You're going to get unusual option activity master course. If you go to our website, we sell it for $1,000 alone. Condition number 1, unusual option activity. Condition number 2, consolidation for more reversals or continuation patterns. STS pattern examples, call option examples, put options examples. You'll also get our option position sizing calculator, my non-blowout trading plan, my confidence scale, a list of the best and worst stocks to trade. And here it is, guys. I'll be completely honest. I didn't really want to make this cheap, but I decided to make this cheap. I make $0 on this. Okay. So this is something I licensed from a big company. So when you sign up for this, at $99, I don't make any money. okay? But I want everybody to have this scanner. So what you'll get here is you'll get 1 month of the usual option activity scanner. You'll get 4 times a week group mentoring session with myself. It's actually 3 times a week. It's Tuesday, Wednesday, Thursday. You'll get the proven cheat sheet. Also, you'll get the total bundle. It's an $849 value, and we only have 10 of these to sell, guys. So there's only 10 of them available because at this price point, I don't make any money. So the first 10 people, there's almost 100 people in here. The first 10 people that sign up right now at optionhacker.com/July will get in. What is the minimum ATR you look at? Usually like 50 cents, 60 cents. There's a standard deviation ATR and then ATR around 60 cents. Question here, are we, unlike institutional traders, limited by liquidity in volume versus open interest, or can we trade the same as that? It seems that you are not, particularly when they buy more than usual option activity, even at the ask price, blah, blah, blah. So the way that works is the biggest institutions in the world will place capital on trades based on the research information. Once we get that signal, we always make sure there's a minimum 1,000 contracts, volume is greater than open interest. After we see that, then we basically just follow them in, okay? We follow them in to the trade. Simple and easy. We got to make sure some criteria line up, like how many they're trading, the dollar amount of the trade. But how do you which trade alert is day and which one's swing trades? So day trades, we have a separate scanner for day trades. That's not available today for this price point. Do you trade options for other accounts because I want to place the trade but give the percentage to the expert? Nope. I trade on about a $50,000 account. I made millions trading. Even if someone gave me $1 million, like legally I can't take it, and it's just not worth it to me. So I only trade for like an hour a day, 4 days a week. So I'm sorry I don't. Any other questions at all? So what you guys get, and I see people signing up. Congratulations. Let me see who's signing up for it here, because we are going to we will be sold out of this by that probably about an hour or so. But I do need a special brokerage account. Nope, anybody can get in. It should be optionhacker.com/July. Let's see. No, it's 99 bucks. I'll make sure that if there's any other reason, is there an annual plan? If you buy for 99, they'll call you and offer you an annual plan. I mean, at 99, I don't make money, so probably not much of an annual plan. Yeah, it's optionhacker.com. I'm going to read your name if you got into it so far. So let me see. Who is taking advantage of this promo, guys? So you're going to get the scanner. I mean, the course alone is $1,000 bucks. And we're going to give everybody the course 100% free. So, Jason, you are in. James Kunal from Houston. Sorry if I said your name. Matthias Junkers, you're in. Junkers from San Diego. I used to live in San Diego. So here you guys go. What you're going to get here is 1 month. We got 6 spots left right now, guys. And at that 99, we'll be sold out. 1 month of the unusual option activity scanner. Basically, you'll get all the real-time order flow in real time. So today, this was Option Hacker. We flagged 5 signals today. So 5 signals: Canoe, Snap, Tech, STLK, and Fro. Those are all signals that happen today. Some trades you could have on for a couple months. We do sell scanners that are shorter dated, like a day trade scanner and a 48-hour spike scanner. But most of these are for like 2 to 10 days. 2 to 10 days. So it's optionhacker.com, guys, /July. What you'll get when you sign up, you'll get mentoring 3 days a week. You'll get the scanner, the unusual option activity scanner. You get the total package. Cheat sheet. Total bundle, $849. Since we're on a webinar, haven't done a webinar in a year, we're offering it to you guys for only 99 bucks. Oh, there's only 5 spots left. Mary just signed up. 5 spots left, guys. The first 5 get in, just like a trade. If not, you're out. Here's some trades that I took with real dollars, my own money. CNQ, $32,000. Gilead, $16,000. Delta, $15,000. Halliburton, $12,000. Hain Celestial, $11,000. PZZA, $8,000. CIN, $8,000. And you get to see on and on and on. Last chance to get in, guys. Any questions you have at all, please put the questions in the chat box. I'll go over what you guys get when you sign up. This is what you get, guys. Okay, you get the unusual option activity, retail scanner. To my knowledge, this is the only way you can get this in the world. Okay, unusual option activity, retail scanner. 1 month of the UOA scanner. It sells on our website. I think we're actually sold out of it on our website too. So if you go to OptionHacker.com, because that's where all the scanners are, and I think we're actually sold out of it. We are sold out of it for $449. So at $449, we are sold out, guys. We sold out of it at $449. You're getting a chance to get it at $99. You can't even buy it on our website, guys. You literally physically can't even buy it. Sold out. Join wait list. That's funny. Okay. You have to join the wait list here. 3 times a month group match rate. So all the calls are going to be out of the money options. So all the calls will be out of the money options. So delta is between 20 and 50. 3 times a week group matching. The group matching will be with myself, yours truly. Traders, proven cheat sheet. Total bundle, $849. When you sign up the link, Joe Skinner, congratulations, you are in from Georgia. Down to 4 spots left, guys. So probably by the time this is over, I'll be sold out. 99 bucks. The link is www.optionhacker.com/July. In my opinion, which is just my opinion, I think this is the only way you can make money as a retail trader. Everybody's looking at the same charts. Can't make money trading charts. Day trading is the hardest thing to do. If you want to trade futures, you're trading against the algorithms. Do you think you're smarter than the algorithms? Do you think you're smarter than the algorithms? Good luck to you. All I want to do, and I think of it like 2 ways. Yes, when you sign up, you'll get the password and the email and the password. I look at it like 2 ways. I'm going to the poker room. I'm saying, who's the best poker player here? And it says Jimmy is. He always wins. And I'm like, oh, you always win. Can I give you money? That's number 1. Number 2, I say, hey, Carl Icon's putting a big bet on this trade. I want to follow him in. It's simple, guys, and that's what we're doing. So that is it. If we have any last minute questions, please put your question in the chat box. We got Ella Boyle from Santa Monica is in. We are down to 3 spots left. Anybody have any last minute questions or forever hold your peace? I'm in Pittsburgh. I'm going to the Yankees game tonight.
Can they email you, Andrew?
What's up?
Can someone email you if they have other questions? Although this kind of seems like a no-brainer. I think you might have said that, but
Yeah. They can email me, Andrew at alphashark.com. Yeah.
all right, there we go. All right, guys, you've got it in your chat there. You need to grab it now and go get it done. There's only 3 spots left. And I feel very honored that you decided to join us on this webinar. We love doing these live series. I like to do them twice a month. We took the month of June off as I expanded my duties, but we are definitely, we've definitely got everything planned out for the rest of the year. And I hope you'll join us again.
Yeah, like I said, I don't think I've done a webinar this year.
No.
They're
And
exhausting.
you were with us last. I think the last time was back in 21.
I know. I just saw I had to redo the slide deck. It's like the end of the closing bell. I like last June. That might have been the last time I did a webinar.
Okay. Yeah.
All right. Thank you guys so much. Everybody have a great night.
Thanks for being with us. All right, folks, here we go. You've got all of the links in your chat. You can email Andrew at alphashark.com. You can also plan on joining us for our next webinar. That was Andrew Keene of OptionHacker, and he's also the CEO and founder of alphashark.com. So this has been a presentation of tradersexclusive.com. I want to thank my speakers for being here, for bringing us some fantastic training tips and techniques and strategies. And I want to thank you all for coming and being with us. The replay for this will be up at tradersexclusive.com/archived_webinars. And you'll get an email from GoToWebinar. You're going to get email from our speakers. I hope you don't consider it to be spam, because this is like your way of being able to follow up with the people that you've heard today. Our next webinar is July 20th. And, you know, from everybody here at Traders Exclusive, we say trade well and see you next time. Bye-bye now.